Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Rima and Nigel. Guys, hi, good morning.
Hi, morning.
Hi, good morning. Tuesday morning, US markets were shut yesterday. Indian markets have been in a nice groove for the last two trading sessions. Do we continue? Does the momentum stick on?
Well, that's right. And today is the final day of the monthly series. So volatility will be sky high, I think, in the final 60 minutes or so. But we're in a better place in comparison to a few days ago. At least I would like to believe so. Well,
I think we're past 24,000, back above 24,000 once again. And, you know, it's a range. I mean, the levels are broadly, 1,000 point. If you want to believe that, 23,300 on the downside, 24,300 on the upside. And basically, you're going to be knocking at the upper end of the resistance. You're close to the upper end than the lower end now. So optimism on US-Iran, just to take it from the top in terms of what came through, is, of course, dominating price action once again. Of course, the US markets did not reflect it because cash equities were shut, but futures were up. Futures were up about, I think, at 1.5%, 1%. Brent is under 100. We're about 98 or so, so not very different over the last 24 hours or so. But importantly, we're down about 20% from the highs, from the peak. Trump said once again on Truth Social, the same thing in different words, basically saying that the negotiations with Iran were proceeding nicely. But you also had US attacking, the Central Command saying, well, they've attacked targets in southern Iran. Basically, the version is that, there were Iranian boats which were trying to lay mines in the Strait of Hormuz. US sunk those boats. They were attacked with missiles by Iran, and then, of course, US proceeded to attack these targets where these missiles were being launched from. And, of course, the CENTCOM, the Central Command, saying, well, these attacks are defensive strikes in that sense. So they're being very, very, what they said was that during the ceasefire, we're being very careful only to be very defensive in terms of our posturing, etc. So in any case, that's what happened. As I said, US cash markets, of course, were closed due to Memorial Day holiday. Now, Trump, and he said this over the weekend as well, but he's now really pushing hard for, Saudis and a whole host of countries to join the Abraham Accords, basically recognize Israel as part of the Iran deal. It's a bit of a tricky, googly kind of a thing, whether he will insist that this be the precondition for any deal with Iran. It's not come to that, but in any case, this is a very, very sensitive issue for the bulk of Middle East. And of course, there are countries like Pakistan, etc., which are being said, well, everyone needs to come on board, sign this together, historic agreement, etc., etc. But we'll see. As I said, this is not a precondition to an agreement, but he's thrown it out there. Now that Truth Social post, if we can just quickly put that back up, I think is interesting. So, what it seems like, at least to me on the first read, so far, President Trump, and this is just 3 hours back, so far President Trump was saying that the real point of disagreement is what happens to Iran's nuclear program, its capability to enrich uranium, what happens to the existing stock of enriched uranium, etc. That's where everything is stuck. So, in that regard, President Trump just a couple hours back saying that we are okay if that enriched uranium needs to move out of the country, or and this is the new part, it can be in Iran, it can be destroyed together with US officials, by Iran, monitored by International Energy Agency. So they're not insisting that this material be taken out of Iran, which Iran has been extremely opposed to. They're saying, well, we need to get rid of it. It can be done outside Iran, but it can be done inside Iran as well. We're okay with both options. So, and that's the reason why I'm saying maybe this is a bit of a softening of stand with regards to the one issue which has been a problem point. Everything else perhaps is number 2, number 3, number 4. This is number 1 with regards to the sensitivity as far as negotiations are concerned. And many would say this is where things are stuck. So we'll see if this is that. in terms of softening of a stand. Now, Finance Minister, in response, and just to come back to the local stuff here, in response to a question. She was here in Mumbai, and she was at two events, and at the second event, at the end of it, as she was going out, she was asked by reporters a bunch of questions. I mean, we were there. We asked about the RBI dividends, and of course the fuel price increases, and on the gold front. So there were lots of questions posed to the finance minister. And in response to a question on the capital gains taxation, the finance minister essentially saying, on this issue, and that's the quote, on this issue and on every other issue, we're always ready to listen to people. We will take their inputs. Now, how much, do you blow this up and kind of sort of, start to rejoice saying, well, this is it. They're looking at capital gains taxation in a very serious way. I don't think so. I mean, something happens, that's great. And we all, of course, want something to happen on that front. But the reading of this is it was a bunch of sort of reporters and asking questions and on. And the answer says it, well, on this and every other issue. So essentially saying that we are willing and open to taking suggestions, and, we'll see what we can do. So that's I think, the right way to look at this in terms of lots of stuff on social media. Well, this is coming and that is coming. We don't know, but this is what the finance minister said, so we'll stick to it. Now, the rupee continues to, the rupee rates collapsed yesterday, by the way. The rupee itself came up very, very strongly, 95.68 yesterday compared to, on Friday, compared to 95.23. So there's a big appreciation, almost from 97. Now we're in the 95 handle. So that's quite something. It's a bunch of things. It's the RBI dividend. It's the RBI governor saying the rupee is now undervalued. It's expectations that maybe something will happen. It's, of course, intervention as well from the RBI in the markets. Nifty, I'll just leave you with levels. As I said, the range 23,300 on the downside, 24,300 on the upside. But very, very near term, the resistance is that, which is 24,300 on the downside, 23,800, which has been a pivot, which we've sort of, crossed and fell back under so many times. Is the support level. GIFT Nifty gives you a quick sense of how we're likely to start. We've had a bunch of good days. So this morning, the start is slightly lower, 50 points down to begin the session. Nigel is booked across with the F&O positioning. Nigel, take it away.
Well, after yesterday's rally, the Nifty and the Nifty Bank, they have turned positive for the May series. It's the final day of the May series, and good to see that we have clawed back, and now we're positive for the May series. But I'll tell you what, the bulls will want to end the series on a high, so let's see whether or not they can drive home the advantage. The FI participation, though, yesterday was muted. You had the global markets that were shut, various global markets, and also flows actually were skewed because of some large trades. So yes, we had institutional net buy number in yesterday's trading session, but we'll need to look at this data more closely. Though the FI flows are positive, yesterday most of the markets were shut and there were a couple of large trades. But more of the same will be something that the bulls will love, particularly since the rupee has pulled back from close to 97, closer to 95, which helps the FI portfolios when you see some strength on the rupee. It helps them, get some kind of gains just on the forex aspect. Moving to the rollovers picture, well, it's pretty much in line. Look at the Nifty, rollovers are around 60%. The Nifty Bank is closer to around 65%. That's more or less in line with what we have seen in the past. What did the FIs do on the future side of things? Well, they covered some shorts. Some mild shorts were covered on index futures. There was some long addition out there. And on stock futures as well, there were some shorts that were covered, and there was some long addition out there as well. So there was clearly short covering on both the index as well as on stock futures. And now the FI short positions, I'll tell you what, it's dipped below that 84%, and it's the lowest we've seen the entire of the series. Remember, at one point in time, the series, they'd gone closer to around 90%. So the short positioning in percentage terms has come to the lowest in this series. The Nifty PCR, well, it's moved up to around 1.26. And from around that 0.8 odd mark, it's moved all the way up. How does that happen? Well, there's a lot of put writing that we've seen, particularly from the FIs in yesterday's trading session. There was a good amount of put addition in the ratio of close to around 4 puts that were written for every 1 call. And if you look at the options data, yesterday the calls that were written earlier, they packed their bags, they got out of the market because suddenly the markets have moved very, very swiftly from around 23,500 all the way to around 24,000 odd. And there was some put writing. You look at it, 24,000 put, 23,900 put, both of them a fair bit of open interest build up. Tell you there was writing in trade yesterday, and someone taking a bit of a punt in case the markets got up, in case the war suddenly gets totally called off. Then there's some out of the money call buying, 9 rupees. That's all you lose, if in case you go ahead and buy that strike. But that appears to be a bit of a punt. So in terms of levels, going by the options data and the kind of writing you've seen at puts, the 20 DMA, which was a resistance, that becomes the first reference point. Then the 50 to around the 20 DMA, you don't want this band to get broken on the downside. And you'll be hoping that the markets can go ahead and scale the recent highs, which is ballpark around 24,254. That's the high that we saw earlier this month itself. So we'll keep an eye out on that mark. And the Nifty Bank, it's found its way to get into its own. And yesterday it pulled out the 20, it took out the 50 DMA as well. You'll want to see more of the same, and if it can hold on to this mark, then maybe it can drive home the advantage and in turn be good for the Nifty. But as I've been seeing the entire series, headline index is consolidating, broader markets, plenty of stocks doing a thing of their own. And I expect the broader markets to hold on to this mojo and the good rhythm that we have seen all of this series. So let's see whether or not the bulls can end on a high.
Well, we'll wait for that. For now, let's just quickly take stock of the Asian markets this morning. The Korean markets, Kospi, opened up after a day's break, and they've opened up strong. It's a 3% rally on Kospi, so consolidating above that 8,000 mark. Taiwan is on the flatter side. The Taiwanese market capitalization has crossed that of India, with TSMC alone having a market cap of more than $2 trillion. Hang Seng also was shut yesterday, so that's opened up mildly higher. Nikkei is slightly lower, about 0.25% lower on the Japanese markets, so retreating after crossing that 65,000 mark in yesterday's trade. The GIFT Nifty is suggesting that we could be mildly lower. Prashant Paroda, Portfolio Manager, Emerging Markets at Allspring Global Investment, is now joining in. Thank you very much for joining in. Prashant, in 2 days, exactly 28th of May, it will be 3 months to date since the conflict in West Asia began. And now there is this whole Abraham Accord. You want to share your views and the implications for markets and investments?
Yes, it seems like it's 2 steps forward, 1 step backwards. Obviously, the good news is it looks like the Iranians were in Doha and they were talking, and their central bank governor, I think, was there as well. So it seems like at least there's some finality coming or some conclusion coming to the process. And President Trump also tweeted that he's open to Atomic Energy Commission overseeing their nuclear enrichment. So it looks like both sides are kind of moving towards some sort of conclusion. From India's perspective, we just need the Strait of Hormuz to be opened. Some of these issues might take a longer time, but if they have sort of the Strait of Hormuz open up, we'll get the oil and LNG supplies, and that will be a sign of relief for everyone here.
No, you're absolutely right. But Prashant, here in India, I think ships are coming, ships are passing through. And by the way, India is one of the 6 countries which is not paying Iran anything so far as they pass. I mean, I'm assuming most ships, there are 40, 50 ships now passing. That was the number we got, I think, yesterday, day before yesterday as well. Most are I'm assuming, paying something, maybe in Bitcoin or whatever. But I mean, I think, so yeah, there is this, in that sense, stealth normalization, which is already underway. So what will it take for the view to turn slightly more positive as this situation normalizes, Prashant?
I think it's only people will probably wait for commentary as this situation normalizes, and once I guess there's some sort of finality with the US and Iran, I think a lot of people have penciled in inflation pressures towards the back half of the year. If some of those ease and maybe rate hikes are not going to happen, then it would ease, at least for a large part of the benchmark, which is financial services and banking. It will ease some of the pressures on that sector. And I think that will kind of fuel some sort of stabilization and rally across the Indian market.
Hi, Prashant. Good to see you in. Indian markets have gone through a phase of underperformance. Maybe the rupee has, overshot on the downside as well when we reached almost 97. Do you think the time has come when the Indian markets actually pull back, maybe attract some flows? Hopefully this end of the war spells good times, particularly with the drop in crude oil prices, which otherwise, puts our fiscal math into a bit of a tizzy. Good case for India to outperform in the next 18 to 24 months?
Yes, and one thing, Nigel, that we should look into is, at least for the US market, as you know, even the US market has been very narrow with AI stocks
Yeah.
kind of leading the pack. But there's a lot of supply coming in. So you'll have SpaceX IPOing, then there are talks of OpenAI IPOing. And I think that would, and these are all very mega cap companies, over $1 trillion in valuation. And as this new supply comes in, we think that a lot of the AI stocks might take a breather as people digest these news flows. And that will look for investors to look for opportunities that haven't really participated over the last 18 months. And India definitely comes into picture then.
We were chatting with Matt Orton exactly about that. And his view is, he said, he's not very worried about these large big tech IPOs cooling the AI tech trade. And his argument was that the retail in the US has been on the sidelines, so SpaceX will look to tap into that. And secondly, he said that while the valuations of these big tech companies are large, the amount that they're looking to raise is not that much. So if you just take a slice out of these big tech companies, it's enough to fund the IPO. So he was not too worried, but of course, that's going to be the litmus test for the entire AI trade. But Prashant, great chatting with you. Thank you very much for joining in. Here's what we will do. We will quickly tell you what the interactions we've lined up on the show today. So first up, 8:35, we've got the management of Suzlon to talk about Q4 numbers. 9 a.m., Amit Anwani of PL Capital will put the focus on the capital goods sector along with our defense. 9:20, we bring you a special discussion with UBS's Divya Nagarajan and Sunil Thirumalai as their Asian Investment Conference 2026 kicks off. 9:40. The management of Poly Medicure joins in to talk about the FY26 outlook. Following that, the management of Indigo Paints will be chatting with us at 9:50. Towards the end of the show, Lata will speak to IFL Capital's Rikin Shah and puts the spotlight on the bank. Stay tuned for that.
Time to slip in a quick break. We've got a lot of stock-specific action to track for you. Get at that in just a bit. For the time being, I give you a sneak peek. Hitachi Energy, Travel Food Services, Amara Raja, JSW Energy, Premier Energies, all of them will be reacting to positive news flow. BEL, Pine Labs, and Aditya Birla Fashion and Retail. All of them react to positive news flow. Concord Corp as well as RVNL will react to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. Asia is a mixed picture of trade. The Korean markets are holding up well, 3% up, but you've got slight softening, flattish negative buys coming through on other markets like the Taiwanese markets and the Japanese markets. The GIFT Nifty is suggesting a start with cut of about 30, 35 odd points, but we had a monster 300-point rally in yesterday's trade where the banks outperformed. The Nifty Banking Index had a 1,200-point surge, so maybe there will be a bit of a give back. And today is the monthly Nifty expiry, and in terms of earnings, you've got ONGC. That's going to be the Nifty stock to track today in terms of earnings. But our entire research team is now standing by with CNBC-TV18's list of top stocks for the day. And Vinny joins in first up here in the studio on Hitachi Energy. How are the numbers, Vinny?
Hi, good morning. So good numbers again that have come in from Hitachi Energy. Strong beat across all the parameters. So revenue, PAT, EBITDA margins, all of them are a beat. Order inflow continues to be above that 2,000 crore mark for Q4 as well as at 2,422 crores, which is up 10% on a year-on-year basis. Order backlog for the whole year now for the next year, what we're keeping an eye out on is 29,500 crores approximately. It's a strong order book which it stands at. Export orders, that's coming at around 36.8% in Q4 is what it accounts to for the order book. Gross margins, bit of a compression that we're seeing in terms of gross margins. Why? The Mumbai HVDC project that came online and the execution took place in Q4. So there was a bit of an compression because of that. Forex loss that came in at around 31.5 crores. But all in all, good numbers that have come in from Hitachi Energy. We'll expect green here.
Okay, got it. All right. Thanks a lot for that, Vinny. A big outperforming stock, but Vinny says numbers pretty good. Hopping across to Ananya, she's here to tell us about Pine Labs.
Pine Labs reported a strong and confidence-boosting Q4, we can say, with a clear sign that the company is now scaling profitably. When we look at the Q4 numbers, revenue came in at around 700 crore, up 17% year-on-year, while adjusted EBITDA surged 73%. EBITDA margins expanded sharply to 21% from 14% last year, and the company reported a profit of around 59 crore versus a loss of around 29 crore a year ago. So this was one of the key highlights for this quarter. Now, cash flow was another major positive, with operating cash flow jumping nearly 8 times to 395 crore, indicating strong earnings quality. Now, when we look at on the business side, online payments remain the fastest growing segment with 56% growth, driven by enterprise wins, D2C merchants and quick commerce expansion. Now, international business is also scaling well and now contributes nearly 15% of revenue. Now, another key highlight was the strategic OMC wins with IOCL, BPCL and HPCL, strengthening Pine Labs' leadership in the fuel payments infrastructure. Now, management also remained optimistic, guiding for 21% to 23.5% revenue growth over the next few years, supported by AI-led commerce solutions, affordable products, international expansion and new NBFC and underwriting opportunities to the Agya Technologies acquisition and a Signal platform. Now, overall, this was a strong quarter for the company, even though valuations are pretty expensive now, but the growth seems good going forward.
Okay, all right. Thanks very much for that. Well, Container Corporation and Travel Food Services are the next two we want to focus on, and Mangalam has got these. Mangalam, morning.
Well, as expected, it was a soft performance coming in from Container Corp. I'm going with mild red on that one because the EXIM business did well. The domestic business saw an impact. And EXIM business actually did well despite the disruption from the West Asia crisis. Revenue was down 1%, the EBITDA was down 3%, net profit down 10%. If you look at the segments as well, EXIM grew about 1% on the revenue. The margins were a lot better, 23.5% out there. And the domestic business out there was a sharp cut in the EBIT performance out there. Good performance coming in from Travel Food Services. I'm going with green on that one, largely because, you know, the business was led by net contract gains of 17%, even though like-for-like growth of 6% was impacted by the West Asia crisis. Overall revenue growth of 25%, EBITDA grew by about 38%, net profit grew by just 15%, but that's on account of a higher finance cost. And there hasn't been any increase in the debt of the company. This is mostly on account of Ind AS accounting. You know, the big triggers for them obviously are the new airports ramping up, which include the likes of Navi Mumbai and Noida.
Thank you very much for that. Over to Devyani now for Aditya Birla Fashion and RVNL.
Now, Aditya Birla Fashion posted its highest organic growth in 12 quarters. That's led by a 14% like-for-like growth in pantaloons and a 45% jump that was seen in the digital-first portfolio, TMRW, albeit on a low base. Now, revenue as a result rose 16% on a year-on-year perspective, although EBITDA did see a 4% fall with a margin compression of around 200 basis points, but that was led by a ramp-up that was seen in the luxury segment this time around. Yet going with a green for ABFRL. Now, on the other hand, RVNL posted a weak quarter, with PAT plunging 60% on a year-on-year perspective, hit by lower other income, weaker joint venture and associate contribution, and higher operating costs for the company. Now, EBITDA as a result has fallen 38%, while margins have compressed from 6.7% to 4% this time around. Now, silver lining, though, is the execution recovery, with revenue up 4% on a year-on-year perspective, and on a quarter-on-quarter perspective, a whopping 43%. Yet, considering the margin weakness, going with a red on RVNL in trade today.
Got it. Okay, all right. Thanks a lot for that, Devyani. Well, going across to Sudarshan, he's here to tell us about Amara Raja. Morning, Sudarshan.
Morning, Nigel. So it was a strong showing for Q4 FY26 earnings by Maharaja Energy Mobility, and of double-digit volume growth that four-wheeler OEMs have seen. That have led to a healthy increase in the revenue that Maharaja has posted. Revenue has increased by 16%. EBITDA too has seen a jump of 13%. And despite an increase in the commodity prices, margin has held on to levels around 11%. It has come at 10.9% versus 11.1%. On the bottom line, there is an increase of 95% on the back of one-time income of 181 crore on the insurance claims. One segment that forms 95% to its total revenue, that's the lead acid business. Their revenue has increased by 12%, and EBITDA margin too has seen a jump of 50 basis points. I'm going with green.
Okay, thank you very much for that. It's over to Vivek now for more stocks in the news.
Well, that's right. So quite a few stocks in news, and when you're looking at JSW Energy, the first one on the radar, remember, JSW Energy, after the block deal in JSW Steel, went ahead and raised close to 4,000 crore rupees via the QIP. The allotment was done at 525 rupees a share, and the anchor book is very, very strong. SBI Equity Hybrid Fund picking up close to 50% of the entire QIP proceeds at 1,920 crore. GQG Partners Emerging Equity Fund picking up close to another 960 crore. Other investors included BlackRock as well as insurance companies. So the company says that post the stake sale in JSW Steel as well as QIP, a balance sheet will be stronger on back of both deleveraging as well as the company gets growth capital. Premier Energies yesterday, remember, a little over 5% equity exchange hands. Again, the list of buyers came in post-market hours yesterday. A good set of buyers. Quant Mutual Fund picking up a little over 40 lakh shares. Nomura India Fund has picked up 25 lakh shares. Small Cap World Fund and Edelweiss Mutual Fund picked up over 20 lakh shares respectively, and other buyers included Canara Robeco, Tata Mutual Fund. And lastly, Bharat Electronics, order win flow continues over here. Company post Q4 results had received orders worth 600 crore rupees, orders across multiple segments, including communication equipment and radars. Order book, remember, at the end of Q4 stood at close to 74,000 crore rupees.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Hitachi Energy, Travel Food Services, Amara Raja, JSW Energy, Premier Energies, BEL, Pine Labs, Aditya Birla Fashion and Retail. Stocks with negative news flow are two of them, Container Corp and RBNL. Well, that's equities. What about commodities? Manisha is now joining in for a complete roundup of all the action. Manisha, over to you.
Well, thank you so much for that. It has been a very, very volatile crude oil prices that we have seen. It did see a decline of 6% on Monday, but today morning, Tuesday morning, that is, we saw 2% of gains come in as well. It's quite all over the place when you look at the statements coming in from various countries. To begin with, the US says that they're negotiating and that it's progressing well, but fresh attacks could follow if talks collapse. The US and Iran also are discussing a framework that would extend ceasefire for 2 months. But there are a lot of unresolved issues as well, like the Iran nuclear program and the authority over Strait of Hormuz. In the meanwhile, the markets also are reacting to the U.S. military carrying out strikes in southern Iran, which they are calling it as defensive actions. So while the crude oil price is still trading below $100 a barrel, there is some gain that we've seen come back in case of metals. Gold, silver gain between 2 to 4%. U.S. copper futures are trading at a 1-week high. And steel, iron ore price is also trading nearly 1 to 2.5% on the higher side. So while energy is slightly back, so is the case with most of these metals as well.
All right, Manisha, thank you very much for that. Well, that's commodities for you. We'll come back and chat with the management of Suzlon to talk about their fourth quarter results in just a bit. Rahul Jain is going to be with us here in a bit. Stay tuned.
Welcome back. Well, let's go across to Hormuz. He's joining to tell us all the big movers in trade and some of them that were backed by delivery. Morning, Hormuz.
Morning, Nigel. And, the IT names have been in the spotlight over the last entire week. But the one name that has continued to outperform has been Wipro. And yesterday's session as well, the stock did well. It was up for the 8th day running in yesterday's trading session. And in fact, it is up 11% now during this period. And in fact, in today's, the current month, the call option of the 210 call option, the premiums were up almost 60% in yesterday's session. Monday's volumes were the highest in over a month, where 7 crore shares were traded. That's almost 3.5 times its 20-day average. And 56% of those shares were marked for delivery. So over 4 crore shares were marked for delivery. The 20-day average is just 1 crore. And it was among the most traded Nifty 500 stocks yesterday. And there has been buying in the stock, considering the fact that the record date for the buyback has been fixed as the 5th of June for Wipro. The other one that did well yesterday was Eicher Motors. It was the top gainer on the index yesterday, the biggest single day gain in over a month. Third straight day of gains. The premiums for the next month call option on the 8,000 call was up 65%. Volumes were the highest in nearly 4 months for iShares. 13.5 lakh shares were traded. That too was 3x its 20-day average. A third of those were marked for delivery. So 4 lakh shares for delivery. That too was double of its 20-day average. The stock, after yesterday's move, has turned positive on a year-to-date basis, but still down around 10% from its 52-week high levels. And lastly, one stock that has been on a tear all through the years, HFCL. The fourth straight day of gains. Its biggest single day gain in a year yesterday. The stock was up 10%. Volumes were the highest in the last 10 sessions. Close to 11 crore shares traded. It was almost at par with the 20-day average. A third of those were marked for delivery. So 3.5 crore shares for delivery. That was double of its 20-day average. It was the third most traded stock on the Nifty 500 yesterday. And the stock, from its March 30th low of 67 rupees in just 36 sessions, the stock is up 142%.
Thanks very much, Hormuz, for that. So that is the picture as far as big movers from yesterday are concerned. Well, Suzlon Energy is the first management we're speaking with on the back of earnings today. Rahul Jain is Group Chief Financial Officer at Suzlon. Here the story, of course, is top-line growth is strong, but there's margin miss, 200 basis point sort of margin miss. The Street was expecting about 19%. Margins have come in at about 17% or so. Rahul, great to have you with us here. Thanks for joining in. Prashant this side. So just sort of take up the margin bit. What happened? Was this commodity-led inflation which hurt? And second, also talk to us a little bit about the order book, because the book itself has declined on a quarter-on-quarter basis. Are newer orders, the flow becoming a little more muted now?
Hi, Prashant. Thank you for calling me on the show. Much appreciate your inviting me here. Let me just talk about our overall financial performance first. Our year-on-year growth for FY26 has been pretty robust. We are at a 54% increase in revenue to about 16,700 crores. Our EBITDA increased about 63% to about 3,022 crore, and our PAT increased to about 3,100 crore. Overall, I think the margins have remained strong, but I would really say that it is a question of the mix in terms of the way we are looking at it. Some of the businesses perform better in terms of the overall margin profiling, and therefore the mix is the one that has created slight dip in the margin. We had always said that the margins will remain in this range, and I think we've delivered that.
What about the order book, Rahul?
The order book, again, we have closed the order book at about 6 gigawatt. Again, what we believe that 66% of these orders being from the PSU and the commercial and industrial sector, I think it is a pretty strong order book given the industry position that it is. We believe that we will continue to grow going forward as well.
Yeah.
Thank you, Prashant.
Rahul, the point is, all this is, so what are you really saying? I mean, let me ask you to put out a guidance for the full year, if you will, from both margins and where will you be by the end of FY27, if you can, or maybe what's the inflow you're expecting this year in 27? So margins and order inflow this year.
I think margins will remain where we are. I think stronger than here is a possibility. I do believe that the industry will remain strong. We've seen about 6.5 gigawatts of installations. We will continue to remain industry leaders. And therefore, we believe that the order book at the end of FY27 will be higher than what we've seen in FY26 as well.
Would you like to put a number to it? In the ballpark, we won't hold you to it. It's obviously never exact, but give us a sense.
Prashant. Again, I would like to leave it at the fact that we will be a stronger position going forward. Our balance sheet remains very strong. We will continue to deliver higher growth going forward as well. That's how I would really look at it, Prashant.
Rahul, hi, morning. Just to talk a little bit more on margins, you're confident about maintaining margins or perhaps even expanding them from here on, but steel prices have gone up significantly. So what is going to be the impact of that? And while you have said the fixed price contract in your overall share is only 15%, for the variable part, is it easy for you to pass on these higher cost escalations to your customers, or is there some renegotiation which can just slow down the entire process? So tell us a little bit about how you're confident about navigating this commodity inflation.
Rima, commodity inflation, largely if you're talking about steel, steel is one of the largest things by weight in a wind turbine. What we believe and the way the contracts are structured, majority of it based on an index is passed on to the customer as well. I would really say that when I look at it from an overall perspective, the margin positioning that we have today is a strong one. The mix will continue to shift and that will have some impact, but I don't think there is a negative trait around it.
Okay, and on collections, what is the quantum which is stuck on NTPC or overall PSUs, and what is your collection target for first half in full FY27?
Rima, when you look at our balance sheet, even from an FY25 to an FY26 perspective, our cash has added to about 400 crores positive. I think that trend can continue going forward. Again, I would not like to name any single PSU or a single position in terms of the cash that is stuck. Yes, there is some cash trap. The idea is to be able to release cash going forward as well.
Can you put a number to the receivables? Not from a particular, but the overall receivables, and how much do you think you'll be able to collect?
Again, as we are growing, receivables will be higher. But whether there will be cash that will be... So let's say our cash cycle should be better by the end of FY27.
All right. Hi, Mr. Jain. Good morning. Good to see you in. For the industry, I believe you're looking at installations of around 8 to 10 gigawatt. Would that be fair?
Yes. Thank you, Nigel. And good to talk to you as well. Yes, 8 gigawatt to 10 gigawatt over the next 2 years is pretty much a possibility. Okay. We are market leaders. And again, we have to also understand energy security becoming a key element of it. We also believe that renewables will have a very large part to play. And therefore, necessarily wind has a very large part to play in this. I do believe that we will remain market leaders on that side as well.
And you have ballpark 30-35% market share. So in all probability, you should be executing around 3 to around 3.3 gigawatt. Fair, right, to assume?
Again, I would not like to put a number, but yes, that's a decent assumption, I would say.
Okay, got that. Last year you had guided for 60% revenue growth. You've ended, somewhere in that vicinity. For this year, on that sort of a base, what are you looking at?
Again, like I said in as an answer to a previous question as well, Nigel, I'm not guiding exactly the number. What I'm only saying is that we will continue to grow at a pace that is in line with the market growth as well.
Okay, all right. Nuvama, they put out a note and they were quite positive earlier on the stock. Last year, you did an EBITDA number of around 3,000 crores. They're talking about 4,300 crores in FY28. Do you think it's gettable?
Why FY28? I certainly
do you think you can get to that in the coming year?
I am saying that given where we are, the position that we can create in the market is very strong. Our deliveries are going to be strong. We are targeting much higher positions. Our cash capabilities are much higher. Our balance sheet is on a strong wicket. Given all of that, why can't we grow fast is the question that I am
asking. Then in the near term, so for this year, they're estimating 3,800 crores. Can you do better than that also? Why only 3,800? Would that be the reply?
Again, I don't want to put a number, Nigel,
but gettable.
In the ballpark, I would say.
What about exports? You launched the Blue Sky platform at Win Europe 2026 in Madrid, where you're targeting Europe's 17 to 20 gigawatt of repowering opportunity. What is the realistic opportunity from exports in FY27, FY28?
Okay, Rima, the way we are thinking about it, when we think about the, let's say the revenue recognition happening from an export perspective, we will probably see revenue recognition coming in more from an FY28 perspective. Again, the market is strong. We have had great discussion with some of our customers. That continues, and the opportunity seems large for us, not just for our newer models that we've launched in Europe, for the existing India and the repowering opportunity in Europe as well.
So in FY28, how much?
Again, I'm not putting a number, but let's say it's going to be sizable over the next 3 to 5 years.
All right. We'll leave it there. Rahul, thanks very much. Good speaking with you. Appreciate you joining us here on CNBC-TV18. Thanks for taking out the time. Okay, we'll take a quick commercial break here. We'll come back. We have Mayuresh Joshi of Mark Smith India joining in for some fundamental stock conversation. Stay tuned, coming up.
Welcome back. Well, as promised, we have Mayuresh Joshi, Director Research, Market Smith India, who joins us on the show. Hi, Mayuresh. Good morning. Good to see you. Well, it's going to be interesting times, I think, in the next 10 days or so. A lot of conferences piled up in Mumbai as well. So, interesting times. A lot of managements coming down. Let's see what the mood is like. That said, we just had the management of Suzlon. One of the stocks that moved from 5 rupees to around 90 rupees came back down to around 55 rupees. Now, in the past quarter, it appears they had some execution issues, but the management is sounding reasonably optimistic about the path ahead in terms of installations and their product mix. What would you make of the stock at around 55 rupees?
Well, I think hearing the management, I think the expectations largely being laid out is that FY27 stroke FY28 should be better years in terms of execution. That's one. Second, in terms of the mix itself, both from a product perspective and a geography perspective as well, the expectations is that it should be pretty stable as we go along. And therefore, I think as execution improves, going by the management here, say, I think the expectations in terms of a strong revenue growth, the EBITDA number in absolute terms can be far higher from what they have posted on an annualized basis this year. And therefore, I think both cash flows and return on equity, which remain equally strong for Suzlon, looking at how their business model probably is shaping up and is positioned as we speak. I think it all depends and hinges upon execution. So I think if they're able to execute well, I think the absolute numbers go significantly higher, leading to better cash flows and EPS rating and rankings as we see it at market spread. So it's making a very good base. Anybody holding Suzlon should cut to.
Mayuresh, Hormus was just telling us about Wipro being one of the momentum stocks. Stock has rallied 11% in the last 8 trading sessions. The record date for their 15,000 crore buyback is 5th of June. So there is some buying seen ahead of that. The price is 250 rupees, buyback price. Would you recommend tendering into and participating in Wipro's buyback?
Morning, Lima. So I think that seems to be a multi-million-dollar question, because I think what probably happens is that they have not been executing well in terms of their core business itself, and the lag in terms of execution, specifically in terms of the guidance that they've probably given for their IT services business, which probably has not improved quite significantly, except a quarter or two in the previous 2 or 3 years, where they probably beat street estimates. I think it still lags not just their own expectations, but the industry growth as well. So clearly, I think from a longer-term perspective, you probably draw a longer-term chart. I think the kind of returns or the ROI that Wipro has probably generated to its investors has lagged quite significantly. IT as a sector, I think we still remain a little bit circumspect. When we speak to our colleagues back in the US, I think the kind of dynamic transitional changes that are probably happening within the sector itself are pretty huge. But it might still be a laggard, in my opinion. So I think if somebody has, and we believe that there are better options around, I think tendering might be a better option.
Tendering might be a better option.
Yeah, absolutely. Well, lots of movers yesterday in that sense. Mayuresh, hi, morning. Max Health has lost about 8-9% in the last 2 sessions. Post numbers, Mayuresh. Any thoughts? Actually, on Max, if you have, or on the space, we had Narayana Hrudayalaya yesterday. That was up about 5%, again, post numbers. Any thoughts on the space?
Morning, Prashant. I think as a space, obviously, I think there is much to be done, because if you probably look at the organized healthcare providers and then the kind of opportunities that they probably have, that's pretty large, both in terms of expansion in sheer bed capacity, but also in terms of the offerings that they've probably got in terms of these servicing that they can probably do across a lot of critical segments. And therefore, I think a lot of the healthcare stocks actually have reported very decent set of numbers. Narayan had a decent set, Apollo Hospital had a decent set of numbers across all parameters in terms of expectations of bed capacity additions happening in a calibrated manner, which does not lead to significant leverage onto the balance sheet. The average revenue per operating bed in significant clusters, and important clusters for them, including Chennai, Hyderabad, probably have delivered well. And the pharmacy business itself, I think the kind of numbers that have probably come through in terms of the maturity of stores that have probably achieved a significant amount of saliency, I think that probably leads us to believe that numbers within the space can continue going well. A couple of risk factors. One, in terms of whether the government probably caps some elements of rates in terms of offerings that hospitals probably give. And second, I think in terms of medical tourism, I think a lot has been spoken about it. I was hearing it in Max Management yesterday as well. But I think it is not translating into significant amount of numbers in terms of absolute growth. And therefore, that remains a very healthy space in terms of how opportunities can come through in terms of medical tourism. But in terms of absolute growth, I think that is not probably translated. And therefore, I think as a space remains very, very attractive. Leaders like Apollo Hospital, in our opinion, can continue to.
Yeah, Aisha continues to do room, Mayuresh. It's just, amazing, right? I mean, saw a sharp dip recently and has pulled back very sharply in just 2 or 3 sessions from there. So 7,400 was the top Nifty gainer yesterday. Thoughts here, Mayuresh?
So I think as a disclaimer, we continue holding these stocks in our global portfolios, Prashant. Our own sense is that the product mix that Aisha probably has and the dominance that it probably still continues to have, our belief is that it might still have a lion's share, though I think competition is obviously growing up in the entire space itself. But again, the diversification that Aisha is probably doing, they're probably looking at export markets. The spares component has now gone up to 10 to 12% in terms of their overall revenues. And therefore, I think a mix of all these 3 factors put together, I think a healthy product mix as far as the domestic markets are concerned, diversifying into export markets, and the proportion of spares where the margins are relatively higher, and where the stickiness in terms of that number probably remaining far more stable going forward, irrespective of what probably happens, makes us believe that it is well positioned in the space that it operates out of. So again, with the bias that we continue holding stock in that global portfolio.
Stay on, Mayuresh. Need to slip into a very short break. We'll come back with the pre-opening and we'll continue chatting with you. We'll also be joined by Amit Anwani of PL Capital to put the spotlight on the capital goods sector and some technical trading ideas coming up with Mitesh and Sudarshan Zakhani. Welcome back. We've still got about 20 minutes to go before the rates kick in. Mayuresh Joshi is still here with us. Mayuresh, which stock would you watch today from the earnings that came overnight?
So in my opinion, again, I think some decent set that probably came through. But Suprajit Engineering is something that I was just monitoring early in the morning. Decent set of numbers on a year-on-year basis. And therefore, I think this is one stock that I would probably keep on my radar. Generally, I think our own sense is that a few of these domestically driven engineering capital good companies should continue doing well, which probably have more saliency in terms of earnings growth remaining far more stable compared to a lot of their peers in at least Q1 and Q2.
What about Premier Energies? Big block deal yesterday. The promoters sold 5.3% equity for about 2,200 crore rupees. But lots of buyers, Quant Mutual Fund, Nomura India, the Small Cap World Fund, Edelweiss, and others like Canara Robeco, Tata Mutual Fund. Any view on Premier?
So could not get into the detail of the numbers, Rima, but I think it's a strong balance sheet. It's a strong company as well. And therefore, I think the kind of move that it has probably exhibited yesterday, I think the expectation is that earnings might continue. But again, honestly, did not have a chance to look at the earnings.
Okay, all right. Anything from the chemicals pack that you're looking at closely, Mayuresh? Something that you like? You know, I was looking at Sudarshan Chemicals. Those numbers actually look quite good. I guess there is some, inorganic as well. But massive growth, I think, on the top line is what I can see. The EBITDA number as well has ballooned up. Margin performance at around 8.5%. Any view at this name? Last 1 month, it's up 20%. But do you have a view?
So I think the space looks pretty interesting for Sudarshan. I think the acquisitions that they've probably done, Nigel, I think that would have probably added on in terms of top line. But how do the synergies probably be built in? Because I think they've got a lot more to digest in terms of ensuring that the stability probably comes through in terms of not just the European operations, but also ensuring that the North American and the South American dealer distribution network is also well balanced out. And therefore, I think the top line growth will be purely based, in my opinion, again, I might be wrong on this, in terms of the acquisition that they've done. But for operational efficiencies to probably kick in, how do they probably stabilize the overseas operations is critical. The space looks interesting. I think within the space, Naveen Fluorine is something that we continue liking at Partners with India. Our own sense is that numbers were absolutely fantastic in all three verticals that they operate out of. The capex that they're expected to do in the HPP segment, I think that could significantly add in terms of the fixed asset turns over the next few quarters. The MPP and the specialty chemical segment will add to those EBITDA margin numbers as we go ahead. And a combination of all these factors put together might ensure that the margins probably remain far higher than one probably expects within the 32 to 34% range as we speak. Very strong balance sheet, strong return ratios, strong cash flows. And the management commentary was equally strong as well. So I think this is one of our top recommendations as far as the specialty chemical space is.
Naveen Fluorine. Mayuresh, you've been doing a lot of research trying to identify some niche AI-related small cap tech companies. Do you want to share some of your early findings?
So I think better judge is you. But again, I think we're probably looking at Explio Solutions. And again, it's very, very preliminary. This is not a buy or sell recommendation. I think our own sense is that it's a German MNC. They're probably catering to a lot of Forbes 500 clients across the globe, whether it comes to Europe, whether it comes to North America. Primarily, part of the business probably goes through in terms of ensuring two things. One, in terms of the back-end infrastructure for the entire BFSI space globally for all the Fortune 500 global clients. And the second element also becomes in terms of the critical applications, in terms of the cybersecurity related issues, to all the aspects probably blended together. Strong numbers probably coming through. We've got a very strong dividend yield as well, 5.5% in terms of the yield that they probably give out. And therefore, I think early exploration, as I said, in this space, again, not a buy or sell recommendation.
Okay, got it. All right, Mayuresh, request you to stay with us. We have Sudarshan Sukhani as well, who's joining in to give us his trade of the morning. Hi, Sudarshan. Good morning. Good to see you in. We had a nice trading session yesterday. Some technical levels got taken out. Do you think the markets are good for more? What would your trade be?
Yeah, good morning. See, we took out 23,800 because of the gap, and now we are at 24,000. We are on the verge of confirming a breakout above it. Once we break above 24,000 with decisiveness, and that should happen either today or tomorrow, then there is a clear run to 24,500. So the trade is be on the long side. Don't panic if you see small dips. And there's a suggestion also, once we start a trend, then intraday trading doesn't make money because the markets open with a gap. Throughout the day, they drift when intraday traders don't make anything. And the next day, again, they open with a gap. You have to become a positional trader, keep long positions, and accept small dips in the way.
Yeah, no, absolutely. Got to take a view and then sort of, maybe this is one of those times. Sudarshan, point taken. Mitesh, what about you? How are you looking at things, and what's the advice this morning?
Morning, Prashant. So I think a couple of things. One, yesterday also I mentioned that getting past 23,800, 850 is a positive event, and it should eventually propel us to either 24,350, 400 as a minimum, possibly 24,600 looks like to be a logical near-term target. So I'll maintain that positive view. Today I think it's a subdued opening, but in case you get an intraday dip, I would be a buyer. Second, I think the bank nifty is also looking quite strong to me. The bank nifty reversal, along with a lot of components, have reversed on the banking side. Yesterday we had a buy on Axis Bank. Today also there are some buy calls from banking news. So the bank nifty could also head towards around 56,100 to begin with, and maybe even higher. So maintaining a positive short-term view on both the indices.
Okay, got it. What about individual stocks? Mitesh, you go first.
As I said, I have a couple of banking names. ICICI Bank features on the list. It's a buy with a stop below 1274. Look for targets of around 1325. The second banking name is Bank of Baroda. There's a buy with a stop at 267 for targets of 285. I also have a buy on Eicher Motors with a stop at 7310 for targets of 7650. And one sell call, that's Colgate Palmolive or Colpal, that's a sell with a stop at 2121 for targets of around 2040.
Got it. Okay. All right. Sudarshan, coming across to you.
Yeah, I have three buys and one sell just to keep it a little tempered. BPCL is a buy with a stop under 300. HDFC Banks now suggests after that huge decline that it may be making, sort of a comeback of some kind. Buy HDFC Bank with a stop under 770. NHPC had a sharp correction. Perhaps that correction is over. Buy with a stop under 75. And Colgate had a bad day yesterday. And also FMCG starts, retreating when the markets really take off. It's a short sell with stop above 2140.
Okay, all right, got that. Mitesh, I want to ask you about the Royal Enfield. Eicher Motors, yesterday it had a big breakout. It was up, I think, close to around 5.5–6% by the time we wound up. I recall when the new entrants were coming into their segment, people were getting nervous. But what a way that one has been thumping ahead. From 7,400, what are the levels you're looking at?
So the first level is around 7,600 to about 7,650. And then I think, a good chance that we are looking at 79. So quite a positive chart setup in the short term. The stock is also corrected from 8,200 to about 6,600 in the last few weeks. And now is again, getting into some kind of an up.
Got it. Okay. All right. Sudarshan, coming across to you in terms of big boys, yesterday you had, most of the stocks that were firing. Reliance Industries, I recall last week when it was, when the market was a little bit jittery, that one did that spike from around, I think, 1,300 closer to around 1,400 odd. Your view on the charts?
My view is that Reliance should now outperform, not just perform with the Nifty. The chances are that it's coming out of that correction, breaking to, say, sort of a consolidation. So it's independently a buy, apart from, of course, the fact that it's part of the Nifty. But independently, it's a swing trade. Look to buy it.
Got that. Thanks very much, both of you, for joining in with that assessment, the view, and of course trades as well. The rupee started, I think it's slightly weaker this morning after the one-way pullback we've had over the last 3 trading sessions now. So there's about a 17 odd paisa pullback from the yesterday close. And I think the GIFT Nifty, the rupee, the Nifty is also in the pre-open starting slightly lower, as the GIFT Nifty was indicating earlier. We've done about 50-55 odd points. Again, here in 3 days, we've rebounded nicely to back about 24,000. Hitachi perhaps is one of the stocks in focus. GE Vernova, when they reported numbers a few days back, created quite a flutter, and that showed up in stocks of Hitachi and other transformer companies as well. I mean, the conference call was pretty instructive. Will Hitachi do something similar? Vinny is here with the numbers first. Vinny, take it away.
Hi, so for Hitachi Energy, the numbers overall are good. A beat that came in across parameters, order inflow above the 2,000 crore mark, which they've maintained over the last 2-3 quarters as well. So 2,422 crores is what the order inflow came in for Q4 FY26, which is an uptick of 10%. As well as in terms of the order backlog, as on 31st of March, it stands at around 29,500 crores. They have a good exposure in terms of the export market as well, of around 37% in their order book as on Q4. Gross margins, a bit of a contraction because there was an execution that came in of the HVDC project as well. There's a forex loss this time that's come in of around 31.5 crores. But all in all, good numbers. But do not forget, just YTD performance, when you look at it in terms of the numbers, the stock price and the stock move, that's up almost 93%. So maybe that is why we could see a bit of a fall. But otherwise, the numbers were good for the company.
Got it. Thanks, Vinny, for giving us that quick analysis. Well, let's discuss the capital goods space and some of the stocks out there. Amit Anwani, the Vice President, Institutional Research at PL Capital, joins us on the show. Hi, Amit. Good morning. Thanks a lot for joining in on this call. What do you make of Hitachi's numbers? Bombastic, right? I mean, but the stock has already seen a big run. What do you do at around 35,000 rupees?
Yeah, Nigel, good morning. Thank you for having me. So, as we saw, quite a strong set of numbers as expected. They carry a very strong order book after winning the 2 large HVDC projects in past 12 to 18 months. And we saw, I think, the quite interesting thing is the further capex announcement. So earlier they announced more than 2,000 crore. Again, yesterday they announced 2,000 plus crore to add the capacities in India. And I think broadly the multiple trends which is driving the T&D space, one locally, where there's a renewable integration and grid expansions happening. And we saw the CA report talking plan about till F35, and we're talking about multiple HVDC orders in the pipeline. And I think that is driving, plus the very strong exports, which is probably driven by the data center demands in US, which also requires electrical equipment, and a lot of MNCs, which are already driven in the US market, have subsidiaries in India. They're expanding here to further increase the exports. So multiple things driving the performance. Of course, the valuations are quite rich, and given the kind of rally which has happened in the stocks, so there is something which is concerning in the near term, but I think performance is very strong.
Yeah. No, it's pretty strong. What are stocks factoring in, Amit, if you will, both I think GE is now at about 50 times. The last I looked at it when numbers came out. This is FY28 earnings. What about Hitachi?
Yeah, so I think G is also close to 365x plus F28. Hitachi would be about probably 80x by that time. So what is happening is that there are a couple of more LCC orders in the pipeline, which will be each worth probably 25,000 odd crores, and they might be tendered in next 12 to 18 months. And as we have seen in the past, obviously, once this lumpy orders comes in, there's a lot of EPS upgrade which will happen beyond F29, considering these are all 4-year executable, 5-year executable orders if they win now. And we have seen that happening with the previous order wins. They are really panning out in a strong numbers for Hitachi, especially since they won the orders early. And I think with these two HVDC LCC orders, where probably Hitachi and GE will have the stake, is something which can really upgrade the EPS beyond F29.
Of fun, say, Amit.
So I think probably currently what is getting factored in is about 25 to 30% odd growth over next 2 years. Yeah.
Okay. So if you're managing running money, if you're managing money, would you invest here right now?
So current valuations definitely, as I said, are kind of rich because the stocks have gone up by 50 to 100%. But considering that there's a multi-year cycle, which we're talking about T&D in domestic, and all this MNCs, as I said, there's a data center tailwind from US where these companies are also exporting in the US or the other markets in the globe, being a global feeder factory. I would be invested for a longer period of time, but for I think near term the valuations are kind of done currently. There are at least 3-4 years of tailwinds which companies are talking about, driven by domestic renewable integration and data centers in the outside market and India market. Yeah.
No, in a few months we'll have all these IPOs, Anthropic, OpenAI, etc., which will become public, right? There's a fair bit of debate whether this will. Already we are starting to see reports. I mean, it's like one big giant circle, right? Everything feeding into everything else. So the cost of tokens, for example, going through the roof. Actually, humans perhaps cheaper than AI. Maybe that'll change as time goes by. But I'm just saying, if that situation changes, if that equation changes, and that'll change first in the US, right? And this big AI boom. I'm not saying it completely reverses, but gets derailed a little bit. You think that perhaps is one risk which is kind of difficult to quantify because this is all demand for on the data center side.
All right. So I think if you see broadly currently, what is driving is, as I talked about, the renewable integration and HVDC for whether it is GE, Hitachi, Siemens. But as I said, they also carry the export. So I think in terms of export, which probably is about 27-30% odd with all these companies, they have not reached to a point that probably they will be kind of setback if the orders are not happening in the US market, if there's a moderation in terms of data centers. So I think immediately for next couple of more years, the India market itself is very, very strong. These companies are localizing for the domestic market and few other markets where they can export as a global feeder factory. Given the data center currently is probably just 7, 8, 10%, the immediate impact may not be as strong since currently we are just seeing the tailwinds driven by the US market, where we are talking about at least 8-9 gigawatt installations of data centers happening each year. And they are kind of full for next 2-3 years in terms of product supplies for the data centers in the US. So even if there's some setback, at least for the Indian entities, should not be a challenge, but who knows, yeah.
Amit, great conversation. Thank you very much for joining in.
Thank you.
It's 9:10, so let's just get in some 9:10 calls. Sudarshan?
It's HDFC Bank. Buy HDFC Bank with a stop under 770.
HDFC Bank. Nitesh, what would you go with?
Banking name as well. ICICI Bank is a bank.
All right. The two large private sector banks perhaps will do the work for the markets today. Thank you, gentlemen. We'll come back to you. For now, let's go across to Sudarshan for some brokerage calls of the day. Sudarshan.
So first one is on Indus Tower. CLSA maintains high conviction outperform call with a target price of 580 rupees per share. It says growing tenancies are being led by Bharti Airtel and Vodafone Idea for Indus Towers. And over FY 26-29 see tower additions of 36,000 and tenancy additions of almost 77,000 units. And even it believes that there is an upside potential to its forecast of a 10% CAGR in EBITDA over FY 26-29 to 11-12% CAGR. And with its high FCF, its dividend yield should continue. And also, valuation on the valuation front, it's looking cheap as per CLSA. Nomura maintains buy call on Lloyd Metals and target price is increased to 2,050 rupees per share. It believes that value-added mix and strategic diversification should drive the next leg of growth. And it has raised FY 27-28 EBITDA estimates by 31%, 40% respectively, and also raised valuation multiples for MDO business to 8 times and raised valuation multiples for non-ferrous business to 14 times. It believes that ROC should improve from 12% FY 26 to 16% by FY 29.
Okay, all right. So thanks very much for that. 3 minutes to go for the market open. And, there is a quick recap coming up for you in terms of stocks that we put out since the morning. So Hitachi, of course, is right on the top of the list, is down a little bit flat, actually. Travel Food Services is up 3. Amar Raja, which saw a very large move yesterday, is up about 1%. There's JSW Energy, Premier Energies, both which are starting higher, 0.5% on JSW. Premier Energies is up about 2.33%. BEL is flattish. Pine Labs will come up. I think there's a Pine Labs is up 3.6, so not bad. And AB Fashion is up about 1.25% or so. As well. Container Corp, RVNL, other names. Container Corp is starting about 4% down. RVNL is starting about 3% lower as well. So that is the overall picture as we begin to start today's session. There's just a couple of 2 minutes to go. Nigel, you want to come?
Well, that's right. Just a few more stocks, Prashant, that are reacting favorably to numbers. Suprajit, those numbers actually look very, very good. I think we had the discussion with Mayuresh as well. Stellar set of numbers. Stock up more than 10%. The con call is at 11 a.m. We are at CNBC-TV18 and we'll try to get you the management before the con call. So that's a stock you should keep your eye out on. You have Uniparts as well. That stock is up close to around 10%. So this is another stock from the broader markets that's reacting favorably. And IIP Industries, the volumes are lower, keep in mind out there. But that one as well, up close to around 6.5%. So individual stocks doing a thing of their own. The lesser known names, some of them, some good positive earnings reactions.
Actually, I mean, this is a flattish start after a decent up move over the last 2-3 days. I mean, 30 points is neither here nor there. So we'll just sort of, take that and move on with regards to the opening itself. So lots of stuff happening. It's not as if, war, peace, whatever. I mean, markets have done their own thing. Stocks companies which are in the right segments, have delivered earnings, etc., have been rewarded. First bell going off, so 23,996. It's absolutely flat, nothing. And the Nifty Bank is starting flattish as well. The small cap index is up 1/3%. The mid cap index is up about 0.1% right now. So, I think this is a perfectly okay start. Let's see what happens from here, though. 23,987 now, so about 45 odd points lower, and about 200-point cut on the Nifty, on the sensex, which is about 0.25% lower, 76,282. Nifty heat map gives you a sense of how we're likely to start, how we're starting, and then we will take it from there in terms of broader markets. Nestle, Tata Consumer are the two top gainers. There's BEL there as well, And on the other side, there's Bharti, Indigo and Adani Enterprises, which are down, at least at start. Rima.
Well, it's a very quiet range-bound start. So market consolidating after 2 days of gains and now drifting slightly lower, 60 points down. The Nifty is at the 23,970 mark. There is no sectoral index to call out. You've got the defense index mildly higher, up close to about 0.3%. The IT index opens up in the green on the way down. Some softness visible in the Nifty Consumer Durable Index, while the Nifty Oil and Gas Index too is mildly lower. Along with that, you've got the Auto Index. But again, no big moves seen on either sector. Again, just to go over some of the large cap movers, Interglobe Aviation is under pressure. That's down 1% ahead of numbers later this week. Ultratech Cement, Bharti Airtel, you've got an M&M, SBI Life, Titan under pressure. The Nifty Banking Index also down 50 points. And here you've got ICICI Bank weak. Reliance Industries opens with a cut of nearly 0.5%. On the way up, IT is, seeing there's so much rotation taking place. So IT is seeing some buying today. LTM is a mover. Along with that, you've got TCS. Wipro continues to be up and about. HCL Tech, Tech Mahindra in the green. BEL has moved well for the last, including yesterday and today. BEL has added nearly 2.5%. SBI is seeing buying now. Coal India, Nestle, Tata Motors also in the green.
Well, that's right, Rima. And just take a look at some of those stocks actually in the broader markets that are really bucking the trend. Pull up a few of them. Suprajit, the stock that we highlighted in pre-open, that's moving higher on solid volumes. Uniparts, that's up close to 10%, again, on very, very solid volumes. Office, AWFIS, that's up more than 10% in today's trading session. So big move out there is what we are seeing. And also a few more names actually that should come up for you on the screen. KSH, I think that's one of the newly listed companies, if I remember correct. KSH International, 5,000 crore market capitalization. That as well is up close to around 13% as we speak. So big move on that one. IFB Industries, one of those big underperformers from the recent peak. But that one's up and about in today's trading session. So good move on that name as well. Net broader markets, well, there are quite a few stocks that are doing a thing of their own. Let's pull up even Sudarshan Chemicals. That's another stock actually that's gapped up in today's trade. Good move is what we're seeing out there. On the flip side, there are some earnings reactions actually that should come up in the screen. Some of the stocks are taking a hard knock. Techno Electric stock down more than 10%. Hard knock out there. I think we have another stock, Poly Medicare. The numbers came in the final few minutes of trade. The stock was down. It's gone further down today. So the stock has come in for profit taking. In the next few minutes, we'll have the management joining us. So net, a bit of a start, softish to flattish start on the headline index, but individual stocks doing a thing of their own.
They are doing a thing of their own. So lots of action actually coming through. Premier Explosives, if you can just quickly put that up, I think seeing more action, more move this morning. So that is something to sort of look at right now. So 4.5% after yesterday's deal. So 33 odd rupees and it's done very, very well yesterday. And of course, I think yesterday it was locked up 20% and it's up another 4% or so right now. Well, the UBS India Investor Conference, of course, gets underway and we are very pleased to welcome in Divya Nagarajan, Head of India Research at UBS, and Sunil Thirumalai, a Global Emerging Market Strategist at UBS, joining us to sort of kick this off. It's a series of conversations over the next couple of days. Divya and Sunil, great to have both of you here. Thank you very much for joining us.
Thank you for having us. We are at the Asia Investment Conference.
Asia Investment, yes. So what, if you were to take like a temperature reading, Divya, with regards to interest in India, where are we at? 100 being the highest and maybe 90 being normalish. Where are we?
I would say about 45 to 50. I think what we are beginning to see is that the earnings season has been pretty good so far. And I think people who have stayed away are now trying to see, can we look at some bottom-up ideas? So we are definitely seeing pockets of interest emerge, especially from an FII perspective. They're looking at value bottom-up stories that can be earnings compounders over a long period of time. So it's still early days, but I would say I would put it at an optimistic 45 to 50 compared to where we've been in the last couple of months.
Sorry, I said the range was 90 to 100. When I heard 45, I had a mini heart attack. I think you meant it in. You're saying it's picking up. That's basically what you're saying. All right. I mean, it's
Yeah,
looking
it was.
the trajectory.
I would have put it lower a couple of months ago, but I think with the strong earnings season coming through, we're definitely seeing more incoming requests from foreign investors.
Yeah, and guys, we're speaking to you on a morning when Taiwan has overtaken India's market capitalization. So we just looked at the live numbers, 4.95 trillion, and we're at about 92 or so. So it's quite incredible, right? But there's one stock there, and TSMC, which is outsized part of the index. I mean, same thing with Korea as well. Actually, both a few weeks ago, both Korea and Taiwan were within 10% of India's market cap range. And Taiwan, of course, has now bridged that. Sunil, so come in there. Is that the main challenge? This entire AI trade and all these large stocks like TSMC, which feed into the big AI boom in the US. And so far, we don't have a foot in the door there, at least in the listed universe.
Yes, so I think just to take a step back and get a broader perspective, for the last 2 to 3 months, we've actually seen meaningful outflows of foreign money from all of EM, all of Asia, not just India. It's Korea has seen big outflows, Taiwan has seen big outflows as well. But the drivers for those outcomes, in spite of that, we've seen, as you mentioned, Korea and Taiwan have done well, and India has, kind of underperformed. So there are a few, angles to that. AI is a very important aspect, as you mentioned. There does not seem to be any letting of demand from the US hyperscalers in terms of their capex, and hence the demand for the upstream companies in North Asia. And yeah, of course, India is kind of missing out on that. And added to that is also the oil price spike and then the Iran conflict. While even the two markets, in the North Asian markets that we are discussing, are also dependent on imported energy. They're not energy surplus economies. They are importers. They've been able to manage it probably a bit better. And for sure, for these specific industries, they are being considered as strategically important, and a lot of support being given to those. So yes, I think AI trade is pretty important for this divergence where India has underperformed. We're not sure if that's dying out anytime soon.
Sunil, the reason why there have been large outflows, I mean, actually, out of markets like Korea, Taiwan, etc., is it? I read that for large active EM investors, there is like a 10% limit on a single stock, and because these are essentially, such large trades, TSMCs, it's like the right. So is that the reason why perhaps there has been some selling out of those? So occasionally we see these kind of sharp outflow numbers, and then they come right back.
Yeah. So absolutely right. I mean, it's not that. I think it's because of the single stock limits. TSMC is beyond 10%, and Samsung is less than 10% for an EM investor, but it's catching up pretty soon. So there would be some funds which are above who would have been overweight Samsung, for instance, and they are being forced to sell. So I mean, I think that is definitely there. So it's not that. So which also means that if there is any correction for some reason in some of those stocks, you could see some buying coming back immediately. So that would also provide some floor to those stocks. So there is this technical factor at play as well.
Sunil, hi. And Divya, hi. Morning. This is Rima here. Sunil, can India have a bull market in the absence of an AI play or the AI ecosystem? What is your own view?
Well, okay. So I think a bull market for India is an absolute return concept. It's not a relative return. So it's possible that EMs do well. India may underperform because of whatever AI trade that's happening elsewhere, but it can still have a positive return year, right? So I think the two are not really mutually exclusive. If you have decent earnings, if you have it is a domestic story for India given the way the index is. So if you have decent earnings growth, if you have you're beginning to see banks pick up on credit growth after a while, they're gaining market share against the bond market. and if they are able to manage their margins to and probably see some increase in margins in a rising rate environment, all of that is good, right? You have other themes like defense, renewable energy, etc., that are picking up across the market. So I don't think, and importantly, keep in mind that after COVID, the foreign investor, the impact of the foreign investor in determining the direction of the market has kind of reduced a bit. It's not gone away, but it has reduced a bit. And if the domestic money is supportive, and if the earnings start recovering, there's no doubt why India can't have a positive return year. And outperformance versus underperformance versus the rest of EM can be for various other factors.
Okay. Divya, you said that the foreign interest in India is picking up, albeit slowly, but it's still picking up. There are certain themes, bottom-up ideas that they're looking at. Do you want to tell us a little bit what is catching their interest? Are there any sectors or themes?
I think as Sunil spoke, Rima, I think financials is definitely an area we're seeing a lot more interest, both on the banking and non-banking side, surprisingly. And again, it's for the reasons that he mentioned earlier. I think the credit growth is picking up. We were also, I think, just coming out of a few years of cleanup on the NPA side. So the sector is actually in a good place and in a much better place, I would have said, than if this crisis had happened a year ago. It would have been a different story. But now the sector is actually in a much better fundamental space. So I think banking financials is definitely a place that we're seeing interest, but also smaller mid-cap names, which have been, again, out of favor from a foreign perspective for a while, where there are compounding stories, sustainable earnings stories. We're definitely seeing interest. There's a lot of questions around what's going to happen around energy security. What is India doing on renewables? Will you fire up thermal? Will you fire up nuclear? So there's definitely a lot of interest around energy security as a theme and renewables as a theme. So definitely in areas of interest there.
Divya, you'll also believe as a house that the AI theme has still a lot more legs to go. How long do you think this can run? Can it run for another 1 year? We're talking about 3 years, because that in a way determines India's relative performance. What is your own view, or the emerging market view at UBS? Divya?
Yeah, so let me sure, let me take that. So I think the way we would look at it is that the timeline or looking at when this trade ends essentially depends on when the revenue monetization hope for the US hyperscalers disappears, right? I think there is some level of monetization that's happening today. Not a whole lot, but it is picking up. Every new model release that comes out and disrupts a particular industry, like we've seen the legal industry being disrupted, consulting industry, and so on. Every new model release that comes out is basically a motivation for those model developers and the infrastructure providers behind them that there is revenue to be made. As long as that hope is there, I think money will continue to flow into those markets. Now, at the end of the day, keep in mind that the entire AI value chain, from the hyperscalers to the providers at the semiconductor providers on the upstream, they're actually making, as a group, a lot of free cash flow. So they're not burning money in the traditional sense. They're not. It's very different from the .com period when the cable make companies were investing a lot of money, getting into a lot of debt, and so on. That's not the situation. So that basically means that this could have some room to go. The opposite scenario, which would be relatively positive from the Indian market's perspective, would be if the very quickly these companies realize that the revenue upside is just not there. People are not willing to pay, and the token budgets are getting exhausted, but the token costs are not coming down. The unit costs are not coming down, just like technology costs normally fall. And hence, there is a big challenge in revenue monetization. I think that's what I would watch out for. Right now, it seems like they are making, decent FCF as an ecosystem. And, that should give them some room to continue with this.
You said, Sunil, that AI boom in India is not a prerequisite for markets to do well. But let me flip that. Is a AI sell-off elsewhere a prerequisite for foreigners to come back in a large way to India?
So to a large extent, global equities are kind of geared up and leveraged to this AI trade. So if you're talking about a serious unwind, that would be bad for equities globally, right? So you could see a relative outperformance of India, but I'm not sure we can be very confident of India having big upside.
Yeah, no,
in that context.
it's not my case that
But
we see a global sell-off in India is up, but generally, relatively, we'll stop talking about this for a bit. We'll start talking about, the good old, all the sectors that there are top sectors here. That's what I meant.
But I would just add at the starting of the of this question you mentioned about the AI trade not being there in India. India can still benefit if AI diffusion and adoption happens 100%. At an economy level. It's a very solid 5-year story. And hence those things will start showing up in our market in other sectors over time. But I just want to point that out.
Yeah, no, 100%. Divya, so run us through, so banks is one, right? You said that energy securities comes up, and I think you've got positive views on names like ONGC and some of the others there. So just talk to us about where to which are pockets you'd pick out and sort of look deeper, study more for ideas.
So I think there are two parts of this conversation, right? The here and now versus what happens if the conflict drags on. So let's leave the conflict dragging on situation aside for now. So I think banks we've talked about, energy security we've talked about. Actually, if you look at the consumption stories, I think consumption's also been picking up. I think if you look at the consumer sector, especially the big staples names have actually done pretty well compared to our expectations. So that's another bright spot right now, assuming that story doesn't get derailed. But I would argue that if inflation comes back, then some of these big, large consumer names could be a little bit more resilient. We also like the short cycle industrials because there's been inventory replenishment, and I think we're seeing that inventory ordering pick up. And that's, I think, a place that we like as well. Long cycle capex could get pushed out more because we have uncertainty going on, but I think the short cycle industrial capex is where we expect to see continued positivity. The last place I would also say is defense. I think we are in an increasingly uncertain multipolar world, so I think that continues to be a secular area of spend for governments across the world, and the Indian government, I think, is no different there.
And Divya, on IT, not in the near term. In the near term, the market narrative is very simply put that Indian IT is an AI loser. But we've seen the Indian IT industry navigate through various technological changes. And if, as Sunil said, that AI diffusion takes place, then and AI adoption picks up, maybe the Indian IT companies do have a role to play. Which side would you bet on, Indian IT over the medium term, valuations aside, just purely on the basis of a business case, on the kind of growth numbers that we have on account of AI 3 to 5 years down the line? Would you be bullish or bearish on IT?
That's essentially taking a call on whether generative AI succeeds on its promise or not and how it plays out. But I think taking a balanced view here, I would say that the companies are much more faster this time around in preparing themselves and disrupting themselves. So you have many large companies have already started reporting AI revenues. So you can see how they're investing in it, how those revenues have started to grow. We're seeing very healthy double-digit QOQ growth in what these companies report as AI revenue. That being said, there will be some disruption on the existing base, which I think will have some impact over the near term. But overall, I think the companies are definitely preparing themselves to see how they can stave off being disrupted to the extent that they can. The caveat here is the technology itself, because the technology, as I said to you when I was there last, is still very young. And as the technology evolves, I think its capabilities seem to be evolving by leaps and bounds. And that, I think, adds a little bit of uncertainty to the level of preparedness that the industry can have on this. So net, I would say we are slightly cautious and we like the smaller names because I think they're a little bit more nimble and agile compared to the large caps.
Sunil, say the same. I just want feedback from foreigners on IT. What do you hear? IT services in India.
I think that's a uniformly negative view right now from a foreign investor perspective. Sorry, Sunil, go ahead.
Yeah, I would agree. It's generally negative, and I think there's also a lot of people are looking forward to just the IT companies themselves messaging and clarifying what their strategy is better. And I think that would really help if over the next, let's say, 1 or 2 quarters, their own strategies are more clearer and put out there. But yeah, I mean, I think there is a lot of skepticism.
Divya, at a slightly high level, I mean, if you pull back a little bit, right, with if AI really is going to change the world, I mean, we thought technology will change the world, now AI will change the world. AI technology did change the world. So if, there's generally, we don't know, right? I mean, it's a debate. Will it create more well-paying jobs? Will it sort of, create, what will it do to effective demand, right? Demand at a certain price point in countries like India. Is that a question which comes up at all? I mean, it's a question which everyone is there somewhere, but no one is really sure how to answer it or how to frame it. Divya, if you can take that.
So let's look at the bull case, right? The bull case is that the IT outsourcing exports. It's not just the Indian companies anymore. We have these big global GCCs that also export IT services from India. If that story remains intact, we don't have to worry about consumption. The sector adjusts. There's a short-term blip, and then we move on. And then the India story, the consumption story, everything continues. If you go to the other end, the scenario there is that if it disrupts jobs, and the white-collar jobs in India are largely concentrated around some of these sectors, then what happens to the ripple effect on the overall economy? Then you could have second-order, third-order impact. So I would say these are the two ends of the outcome. We would hope that we end up towards the positive end of the spectrum, where the industry and the export services adjusts, and therefore we find some way. Sunil, I think, please feel free to jump in. But we've also seen how India's leapfrogged technological advances and moved. Like, for instance, I never had a landline because we moved around a lot, and then we went straight into mobile phones and mobile payments and everything else. Could we have something like that benefit India? Could AI actually end up being a benefit for India, where we leapfrog certain parts of our evolution?
Yeah.
I think that's an interesting question as well.
No, I think that's Sunil, if you want to come in. I was talking to someone in a top consulting firm who consults in the digital AI kind of adoption thing. His perspective was there's a lot of FOMO right now as well, especially if you're listed. What is your AI strategy? What are you doing? So maybe but it's real, but there's also some level of FOMO. But yeah, Sunil, jump in if you want to.
I mean, if I may quickly add, I don't think we have the kind of confidence or visibility that we'll get into a situation where large corporations suddenly come around and say, I'm firing 90% of my staff. No, I don't think that's so that economic disaster where there are no jobs and companies are just focusing on cutting down staff. I mean, that's a very, very far away, low probability event where we stand right now. What is more likely is that companies use the available AI tools and the upcoming AI tools to become slightly more productive. Cost of delivery of products or services to their customers comes down, and hence their addressable markets go up. That's how I'm thinking about it, at the moment, because that's what is visible right now. That's what we are seeing, within the companies that we study or within our own organization. But I don't think we should, start factoring in situations where, 90% of white collar staff in India will get fired and, it'll all be done by AI. No, I don't think that level of confidence we have on the technology right now today.
Okay, all right. Hi, good morning, Sunil, as well as Divya. Divya, you just briefly spoke about consumption. I wanted to understand about how you approach gold as an asset class, and also in terms of theme. Some of the jewelry stocks, they pulled back because of those duties that were imposed. But otherwise, the gold appeal seems to be quite strong. So your take?
Well, I don't claim to be an expert on gold. I think India has always been a gold-hungry country. But I think the gold is also, as long as there is uncertainty around what the Fed is going to do, I think the gold prices will remain volatile. That's our house view. I think Bhanu Bhaveja, our strategist, when he was here, and I will quote him, he said gold could have, we've seen a lot of volatility and a spike up in the last few months on gold on all these concerns. But we do think there's some upside left. But in the short term, I think the uncertainty around interest rate hikes in the US will keep gold volatile as well.
So, Divya, my question was on the jewelry stocks. Do you believe that they fall well into this consumption basket? Some of them are not very, very cheap. The largest player in there, which is Titan. And the other ones, at some point of time, they're given a bit of a heartache. So, your view on the stocks?
So I think it's, as you correctly said, very stock specific. There are some that are well-managed companies and have navigated gold prices very well. And there are others who are still kind of finding their feet in terms of managing those idiosyncrasies. So I think it's going to be very company specific then.
Sunil, if the war comes to an end tomorrow, do you think the Indian markets rally hard? Will foreign investors, because energy security is one of India's vulnerable points. So if the war comes to an end, what kind of upside do you see immediately in the markets?
There will be an upside, yes, of course. But I would go back and see how much has the market actually fallen since February 26th. When we had no clue that this war is going to happen, right? So I'm not sure if anything beyond a 4-5% kind of a upside, based on this. Then you come back to fundamentals. Then you come back to relative earnings growth. India versus other markets, and within India, which sectors, and so on. So it is definitely a good sentiment positive, but I don't think. Just like tariffs last year, which was a big headline news, but the markets largely shrugged it off. I think that's been, what we've seen in the markets across global markets when it comes to oil price impact as well. So yeah, that will be a positive, movement, of course, but I don't think it'll be a whole lot.
Divya and Sunil, when are we seeing the first AI agent sectoral researcher? At one of the sell-side firms? Will it be in UBS? At UBS, I'm sure there is one already somewhere. Divya?
Well, I think the way I would think about it, not to alarm any of our population or sell-side brethren, I think it is definitely a good helper. I think it can definitely help us kind of get to the market faster. And I think we do at UBS have a lot of programs that help analysts kind of publish faster, respond to market reactions faster. And we also have AI avatars. So the next time, hopefully, my avatar is speaking to you and not me. But that being said, I think for regulatory and for whatever logical reasons, I think I would like to hope that human brains don't get replaced. And therefore, our analyst community and our sell-side brethren, I think, can rest in peace that there is the human value and the logic that we bring that still continues to be accelerated by AI rather than replaced by AI.
When I heard that rest in peace, no, but point taken. I hope we're all here, a year from now, and you sort of join us for the next leg of the conference next year. Thank you very much. Great start, and wish you all the best of luck at the UBS Asia Investor Conference. Thank you for joining us.
Thank you. Thank you.
Okay, well, there's Divya and Sunil with perspective on markets and a little bit of sort of, looking ahead from just the here and now as well. We'll take a quick commercial break here. We have the management of Poly Medicure joining us on the other side. Fourth quarter numbers with Himanshu Baid in just a bit.
Welcome back. Let's focus on management then. Poly Medicure, that's the next management on the show. Remember, they reported a rather muted set of numbers in the past quarter. Margins remained under question, under some pressure, actually. However, the management is optimistic on the growth outlook. They are guiding for domestic business to grow by 20%, international business to grow by 15% into FY27. To discuss this and more, we're joined by Mr. Himanshu Baid, the MD of Poly Medicure. Hi, Mr. Baid. Good morning. Good to see you. Well, it appears in the near term there are some challenging times. Now, we're going by the guidance that you have given. You're guiding, I think, for around 2,300 crores of revenues. Could you tell us infusion therapy, which has come down to around 50% of the total mix, towards 50% from, I think, 65, 70%. How much will it contribute in FY27? And also the receivable day cycle. That got a little bit elongated because of export weakness, customer support as well. What steps are you taking to bring back some working capital efficiency?
Good morning, Nigel. I think, let me tell you first, I think quarter four was much better for us compared to the other quarters. And if you remember, when we had guided around quarter three, that we will start doing better from Q4 onwards, and I think that has already started happening. In terms of revenue, in terms of margins. In fact, the EBITDA margins have been the highest in Q4, around 27% odd percent on a standalone basis. Of course, when you look at the consolidated numbers, of course, the margins have decreased because of some one-off expenses in the subsidiaries. But overall, I think the trajectory is fine. On the infusion business, I think it'll be around 50% even for FY27 because we are focusing on other businesses right now. I think it's a transition for the company, moving from low technology to medium and high technology products. So I think that transition is driving this change, and I think that's what we are planning over the next 4-5 years. How this company is transition, from a low technology platform to a high technology platform.
Okay.
So that's where we are. In terms of working capital, yes, there was some stress last year because of we have extra credits given to our customers, India and overseas. But I think now more or less at a level which shouldn't be, further. We'll not see more, let's say, cash flow cycles, going down. But I think maybe we'll be able to recoup more from where we are today.
Okay, all right. But you want to give us a number on receivable days?
See, the receivables currently around 95 to 98 days. Hopefully, we should be able to bring it down to around 90 days, roughly in that range.
Okay, all right. Now, let's take one of those points that you spoke about. You've spoken about these several high-end products under development, such as IVL, advanced cardiology devices as well. Could you give us, what kind of commercialization timeline are you looking at? And say, what kind of revenue potential can you look at from these products, say in the next 2 to around 3 years?
See, basically, if you look at cardio business, that's a high TAM business. India again depends a lot on imports other than the stents and some basic products. So I think that is where we are focusing on, and I think like drug balloons, IVLs and some other high-end devices. So we are working on them right now. Some products are going to be launched shortly. Some are scheduled for launch end of this year. And of course, based on regulatory clearances and overseas markets, it'll take few years to be in those markets. So, but I think the important thing is to develop internally those devices and focus on R&D. That's been the key area here. And then the next one is orthopedics, where we are focusing on trauma right now and completing the whole range on the company we acquired in Europe. And then, of course, going to focus more on joints in next couple of years. So I think it's already a movement, moving towards high technology products, where India still has import dependence and moving in global markets where we see a larger TAM on these kind of products.
150 crores of revenues in 3 years should be possible.
Yeah, correct.
Mr. Bed, hi, good morning. Prashant here. So the India business, if I look at FY26 growth compared to 25, is largely similar, 18-19%.
Yeah.
It's the export part of side, especially in Europe, where growth has come off meaningfully.
Yeah.
How much of this is due to cheaper Chinese imports or dumping into Europe?
See, I think Chinese dumping is happening everywhere. I think it's India, it's happening everywhere in the world. So I think that's not a new phenomena. But I think for us, I think it was more of a supply chain mismatch. Most of our products were going through Red Sea and then it got closed. And then, we were using the alternate routes and suddenly Red Sea opened again. So I think there was an inventory mismatch with most of our customers. And I think it was a 1.5, 2 month inventory mismatch. And that led to a lower revenue. And I think we were caught a little off guard on that. But I think now, last 3-4 months, we have seen that picking up. We have added more distributors in the European market. And I think things look much more positive. And I think if you see, we have already guided now, and that is ex-India revenue, international revenue, 15% growth. We are not talking about a global revenue here. It's India revenue, ex-India. So I think now we are in a much better shape. The business is, we have seen Q4 ramping up already.
Yeah, Mr. Bed, so international revenues will grow 15%, consolidated 20%.
Yeah, that's correct.
And Europe will go back because 25 growth was, FY25 growth was 25%, was 7-8% in 26. I mean, that'll go back after these, now that the situation, as you say, is not...
Europe, if you look at it as a whole, when we look at our acquisitions and ex-India, then we should, because our current subsidiaries will also grow. The companies we have acquired and the company we had earlier acquired a few years ago. So I think that will again grow. And I think there we could see growth. If you look at consolidated growth, we may see close to around 20%.
Mr. Baird, morning, Rima here. So just on that point about commodity inflation, now you have said crude-linked raw material prices are up about 20%. In your guidance that you've given, what does it assume in terms of crude prices? They stay over here, it gets worse for how long? And secondly, is there going to be more from you in terms of a price increase? You've already secured a little bit from your customers, but will you push for more?
See, I think, first of all, I cannot predict what is going to happen in future. I think every day is a new day. But fortunately for us, quarter one, because we had, reasonable amount of inventory. So I think we didn't have much impact in quarter one on the raw material pricing. It's a very marginal impact. But yes, from quarter two, we may see a small impact. And I think, but the most important thing is as we export around 70% of our products, so I think currency depreciation is going to help. That's 7-8% currency depreciation, which has happened from, February onwards till date. I think that's going to help, and some price increases. Currently, we have assumed that prices, if they remain where they are today, I think we may see a little bit of margin erosion, maybe 200, 250 bips on gross margin level. But I think we are trying to do some cost saving projects and ensuring that, we can recoup that back. And we may do one round of price increase further, maybe in quarter two, end of quarter two or early quarter three.
Got that. And one more point about the West Asia conflict. You spoke about you get 6 to 8% of revenues, demand is intact, but there are certain shipping and pricing issues. There are some pending orders, which you spoke in the conference call, which you're waiting to execute. Could you put a number to that? What is the deferred revenue we're talking about?
See, basically, it's around 20 to 30 crores of revenue, which got deferred in March. And also we are seeing a similar revenue getting deferred in quarter one. I think the biggest challenge is the cost of shipping. It has almost become 5x, 6x or 7x, and even it's taking few months to products to reach because people are using alternate routes and shipping lines are not confirming deliveries right now of products to customers. So I think that's a big challenge, but hopefully, gradually things get eased out a little bit, but still I think situation is very fluid. I think exports to West Asia.
All right, final question, sir, before we let you go. Renal care, I think, that was around 190 crores in FY26. What is the growth you're looking at in this year? And if you could help us out on the number of dialysis machines that you're looking to sell. I think last year it was around 450. This year, what does the number go up to?
Right. So this year we are looking at renal business to grow around 20% odd. Again, Nigel, why I'm giving this muted number is because we still are suffering from the Chinese dumping. Because many Chinese companies are using the FTA route and pushing products in India at zero duty. And I think that is where we have been telling the government to curb that. And if that doesn't happen, I think then we'll still have a muted growth of around 20%. We have managed around 22% growth over last year numbers from FY25 to FY26. I think similar number. In terms of machines also, I think we should be able to see a growth of around 20 to 25% in machines also. On 450, we may go between 550 and 600 machines.
Got it. And renal revenue goes to around 230 crores. Just a quick word with regard to this dumping. What is the price of your dialysis machine if I compare it with, say, the Chinese machine or, say, the European machine as well? If you could, give us the closing comments with those price ranges.
So I think Chinese machines, of course, China, being a very large manufacturer of equipment, I think their price is always lower, maybe around 10% or so than what we are quoting today. But European machines are probably around 20-25% expensive than what we manufacture in India.
Mr. Baird, great conversation. Thank you very much for joining in. And hopefully the next time we speak, the conflict is behind us and things get back to business as usual. Thank you.
Thank you. Thank you so much.
All right, let's move on now. Indigo Paints is the next management on the show. They reported a decent set of Q4 numbers. The growth has come in ahead of peers, but margins are flat. Hemant Jalan, CMD of Indigo Paints, is now joining in. Mr. Jalan, how has raw material inflation been for you so far? You've undertaken price hikes of about 12%. Is that enough, or are you looking at another round of price increases? And then if you could tell us, what is your expectation for revenue, volume and margin guidance for FY27?
As far as price hikes are concerned, I think the industry is more or less done with it. The major portfolio, which are water-based paints, I think the price hikes that have been taken kind of offset the increase in raw material costs. Maybe there is still some uncovered gap in solvent-based paints, but as crude oil is coming off, the price of mineral turpentine oil from the Indian refineries is also reducing. So if that continues for a few more days, I think even for solvent-based paints, we should be fine. So I don't think that immediately the industry is looking for any significant price increase unless the situation in West Asia were to change for the worse. And let us hope that that does not happen.
Okay. And what is your expectation, sir, in terms of revenues, volumes and margins for FY27?
Well, in our case, if you find right from the last 5 years, we report volume and value growths individually for 4 different segments of paints. And you'll find that the volume growth numbers and the value growth numbers are pretty similar. Now, because of these price hikes that have happened, I would expect that in FY27, if these prices were to sustain, the value growth would be a little in excess of volume growth, should be by maybe 10 percentage points. We really look at value growth numbers, and given the fact that 10% of growth will come by simple inflation of raw material prices, I think we would be looking at doing something like a 25% minimum top line growth in terms of value.
Okay, so 25% value growth. So volume should be about 10% less. So about 15% volume growth could be a fair assessment. And on margins?
Roughly, yes.
On margins?
Margins, I think, would be flat. I mean, I think our margins are very good. Our EBITDA margins for the whole year were in the range of 18 to 19%, which are the second best in the industry after the market leader Asian Paints. So I don't think that there is too much scope or an interest in driving that EBITDA margin further up. We are happy if it remains in that range. We are more interested in pursuing top line growth rather than protecting EBITDA margins at this point in time. So I would say that EBITDA margins would largely remain flat, and we look forward to very high top line growth in the coming year.
Okay, got it. Mr. Jalan, good morning. Good to see you. And that's perfectly ties in with your strategy. You've been growing at a faster clip than the industry, and market share would be on your mind as well. So have you gained some market share in the past year? If you could give us a number. In the coming year, since you're again focusing on top line growth, where is that market share headed? And Berger, they were indicating that they are eyeing some market share in various geographies like in South India. Have you seen some kind of move over there?
Well, Berger has been typically weak in some of the southeastern states, not all. I think traditionally they were weak in Karnataka and Tamil Nadu, and I think they have gained a lot of ground in both of those states. Of course, they have a long way to go given their overall number 2 position in the country. As far as we are concerned, as long as we grow faster than the industry, obviously the market share is going up. I don't have a specific number to it because one of the recent players does not disclose any numbers. So it's hard to put a firm number on what your market share is, but I would roughly estimate it to be in the range of about 2.5%, which is not very high. And therefore, pursuing top line growth, for which there is a lot of scope and headroom for, is the number 1 priority as far as the company is concerned.
And if I had to give, a target or an aspiration in the next 3 years or so, you should be what? More than 3%?
Too far away to think, to give a number. Let's take it year by year, and every year, if we are able to outstrip competitive top line growth by a factor of 2, I think we would be happy.
Okay, and you have some, let's focus on your business then. You have some expansion plans, right, that will come on stream. So if you could tell us at peak levels, what kind of revenues can you do and how you see the scaling up of this expanded capacity coming on stream?
You see, capacity in paint industry has got nothing to do with sales. You increase capacity a couple of years earlier than when you expect you will hit a bottleneck. So just because your capacity goes up does not necessarily mean that your sales goes up by that proportion. I mean, we are not losing any sales for want of capacity even today. So this capacity increase that happens in the paint industry is really forward looking. And I don't think that yes, we are having a major capacity expansion at our Jodhpur facility. That is partly a capacity increase and partly a modernization effort to mechanize a lot of the operations, which were quite of a legacy nature. So I don't think that per se makes a difference in sales. Sales is determined by your marketing inputs and the way you go about adding, your network and growing your existing network, installing tinting machines, etc. So I think that that is somewhat independent of capacity increase that any company may undertake.
And how are you thinking about expanding your distributor profile in FY27, FY28? What is the kind of spend that you're earmarked? Because as you said, your sales really depends on that.
Yeah, so more than increasing the headcount of the number of dealers, which does happen organically every year, the greater thrust is on increasing the throughput per dealer that we already have. With the amount of dealers that we already have, which is touching, active dealer count touching close to 20,000, we can possibly do a revenue which is 2x of what we are doing. Now, of course, that's not going to happen overnight, but that is where the potential is. And therefore, the attempt is to increase spends not only on dealers in terms of dealer schemes, but more importantly on the influencers, the painters and the painting contractors, who are the ultimate determinants of the brand choice of the customer. So the effort is going to be to increase spends on all of these things to drive up the top line at a faster pace than competition.
Mr. Jalan, we leave the conversation here. Thank you very much for joining in.
Thank you.
Well, that's Indigo Paints for you. Absolutely flat for the markets, but individual mid-caps are doing well. So Bliss, GVS Pharma, it's a 15% up move on that stock. Yesterday also, stock was up by nearly 5%. Today, it's added on some more. Superjeet reacting to numbers. Premier Explosives was up 20% yesterday. It's added another 8% in today's trading session. And you've got big gains coming through in Ather Energy, Shriram Properties, Office, Campus Activewear came out with numbers yesterday, and that's been a big mover. Chandan Taparia, Motilal Oswal Financial Services is now joining in. Chandan, a little bit of a recovery from the lows and now back above the 24,000 mark. What's the trade on the index and individual stocks?
Good morning, Rima and Nigel. Thanks for having me. So, Nifty has given a consolidation breakout on the last day after the range-bound move between 23,250 to 23,850 marks. Yesterday, it consolidated, then gave a breakout, and today is holding at higher levels. We have a monthly expiry, and sustained put writing is clearly visible at lower strike at 24,000, which is supporting the index to hold the higher levels. However, we are looking the move in next second half of the session due to the short covering. But as of now, the stance is buy on decline. View remain positive as index started to form higher tops, higher bottom, and now heading towards its 50-day exponential moving average. So 23,850, which earlier used to act as a hurdle, may act as a support now. And with that support, index can head towards 24,200, 24 to 24,400. For day point of view, use any small dip for a bounce of 50 to 100 points in the Nifty index. Looking at the Bank Nifty index, it negated the lower top, lower bottom on the weekly chart. It witnessed a decent recovery in most of the banking counter. Put writing is clearly visible. Short covering is seen. So looking for an upside move as of now, 54,750 is support for a bounce towards 55,555 to 55,750 in the Bank Nifty. Now talking about the stock wise, positive on the power and energy sector. And here we like Adani Power, one of the strongest name, which has been moving upwards with sustained long build-up. In fact, we have seen a consolidation breakout on the daily and the weekly chart with positive placement on the mechanical indicator. So looking for the extension of the upcoming rally towards 245, one can buy with support of 231. Second trading area, that is buy on Vedanta from the metal pick. Pole and flag pattern, consolidation breakout of last 7-8 days, given a decisive hold about 340. So looking for a next move, one can buy with support of 336 for an upside target towards 358. Last trading area, that is from the wire and cable, that is buy on Polycab. Strong setup, supports are gradually shifting higher, moving upwards. Longs are intact, better rollovers are indicating fresh leg of rally. So one can buy with support of 92.20 for a upside move towards 97.50 to 9800.
Thank you, Chandan, for joining in. Get into a break. On the other side, Manisha Gupta will talk about monsoons and their progress. Stay tuned.
Okay, welcome back. 18 points higher. So, the initial dip got bought. We are up 24,000 plus. So it's a pretty decent looking screen, all told, so far. And look at the market breadth, which is also clean 2:1, a repeat of what we had yesterday. And of course, let's hope this stays this way all the way over the next many hours. Well, the other big corporate story which is underway is the Tata Sons board meeting, which is happening today. And the meeting is likely to take up issues raised by Noel Tata in the last meeting. My colleague Shireen has got a close watch on this. Shireen, take it away. What should we expect?
Well, thanks very much. Yes, this was a board meeting that, remember, was postponed, was deferred to a later date. Today is when the Tata Sons board will meet again to take up issues that were raised in the last meeting by Noel Tata. Now, the issues that Noel Tata had essentially raised were about capital deployment, capital allocation to specific businesses, to specific companies, and asking questions about the returns on those investments. So the companies that will present their plans today include companies like Air India, Tejas Networks, the EV business, Agastya, Tata Digital, and Tata Semiconductors, so those Tata Electronics. So those will be the companies that will present their plans in terms of the capital deployed, capital allocation, as well as what they expect now in terms of a growth trajectory, as well as a return on investments. Separately, the other issue that is likely to be taken up is around the Tata Sons listing issue. Remember, this is an issue that has divided the board. People like Venu Srinivasan, who is a board member, has publicly stated that, it makes sense for Tata Sons to be listed, but there are concerns on what the listing could potentially do to the ethos and culture and structure of the Tata Group itself. In fact, it was articulated in a comprehensive opinion piece put out by the former vice chairman of Tata Sons, N.A. Poonawalla, recently, where he talked about how this will change the very nature, structure and culture of the Tata Group, which has been in existence for over 100 years. So no specific decisions perhaps are likely anyway. The listing decision is also incumbent on the decision that the RBI takes on whether it exempts Tata Sons as an NBFC from a listing or not. And that decision, we are given to understand, has not been communicated so far one way or the other to the group. So that's still a question mark. That is still an uncertainty that the board will have to deal with. But, there is difference of opinion on whether Tata Sons should be listed or not at the board level itself. The issue of N. Chandrasekharan's reappointment is not part of the agenda for the meeting today. So that is a separate matter that is not going to be taken up today. We've already started to see board members like Venu Srinivasan arrive. And of course, we'll keep you updated on this corporate story.
Yeah, the shots are there, running parallelly, Shireen. So, yeah, interesting one, as you said, perhaps no decision as such, but of course, we'll keep you posted with what we can pick up in terms of the discussions at that meeting and more as well. Shireen, thank you very much for that. So that's a story we continue to track and get details from as we go on. And there are, maybe... as Shireen said, there is, of course, the listing issue, but there is also capital allocation issues. Names like Tejas Networks, they're listed companies. And, we'll kind of come back to some of them. Tejas, of course, from a share price point of view, has been a bit of an underperformer over the last few years, despite the recent run-up that we've had. Well, that's the Tata story. The board meeting gets underway. Well, Manisha is now joining in with... an eye on the monsoon season and how that is sort of progressing and what are indications looking like. Manisha, morning.
Morning. Thank you for that, Prashant. The reason that we're talking about monsoon today is because today is the onset date as prescribed by IMD for the onset of monsoon in Kerala. So what we do understand till time is that you already have seen Andaman and Nicobar Islands and parts of South Bay of Bengal already see a monsoon onset. That is on 16th of May. And this is quite ahead, in 10 days as well. You could be looking at an onset coming in today for Kerala. When you look at the actuals and the forecast, though, there is a very slight variation that we've seen coming from IMD onto that one. But as you can see, in the last 6 years, it really has been 3 times that you've seen the onset happen in June and 3 times that it has happened in May as well. And when you look at the earliest of monsoon in last 6 years, that was in 2025 on 24th of May that we saw onset in Kerala, and the most delayed in last 6 years clearly has been in 2023 when we did see the onset happen in June 8th. So for this year, it's May 26th, which is today, that we are expecting an onset, but it also really is about an El Nino year and a lower than expected, lower than normal monsoon that we are preparing for as well. So when you look at IMD, they're talking about 92% of long period average, while Skymet has forecasted 94%, both basically below normal therein. India is in midst of a Northapam, and this is what it's traditionally known as well, is what we are looking at. So this is the monsoon percentages that we've seen in last few years. Last year was 108%. It was the wettest June, by the way, in many, many decades. 2024 was also above normal at 108%, and it was in the second half of the monsoon time that you saw very, very heavy rains come in. 94% in 2023. This was also an El Nino year and is the reason we saw a below normal monsoon. 106% in 2022 was above normal again, and 2021 was just about normal monsoon. So this is what we've done in last few years there. But coming back to heat wave as well, that's exactly what the India is dealing with right now. What we are looking at right now is Northapam, and this is being talked about very, very much in the Indian scenario right now. This is traditionally the 9 hottest days that you see in summer, and that is between May 25th to June 2nd is what we understand. IMD in the meanwhile also has issued various alerts. There are red alerts and orange alerts as well for 26th to 28th therein. Most of that in northwest India, Punjab, Haryana, parts of Chandigarh, Delhi and West Rajasthan as well. And then you also have central India, which is East Madhya Pradesh, Uttar Pradesh, Vidarbha and Maharashtra, which in any case are looking at temperatures as high as 45 to 48 degrees in some places also. Now, when you look at the progress onset itself, if today we do see Kerala monsoon onset coming in, then you could be looking at next 10 days. This is all IMD's estimates, that if that happens today, then Mumbai could be looking at monsoons between 5th to 10th of June and Delhi, of course, by 27th of June. The delayed, of course, is by 4th or 5th of July that you could be looking at in Chandigarh as well. The IMD criteria for official onset of monsoon that the markets will watch out for today are, of course, based on 3 things. One is that 60% of the 14 designated Kerala and Lakshadweep stations must log in 2.5 mm rain. That is straight for 2 days. If the rains have happened yesterday and today as well, is when the onset would be declared. And then you have westerly winds. That's the second criteria that the IMD watches out for, at a height of 4.5 kilometers and speed of 28 to 37 kilometers. And the third thing is the outgoing long wave radiation, which has to see a drop, and you have to have a heavy cloud forming, and that is when it's a monsoon. So these 3 criteria, if are met, you could be looking at IMD announcing onset of monsoon today itself.
Fingers crossed. Thank you, Manisha, for that. We will get into break. On the other side, Lata will speak to IFL Capital's Rikin Shah and put the spotlight on the banking sector. Stay tuned.
Our focus today is on the banking sector. Now, whether you look at the performance year to date, that is from Jan 1st, month to date, or just this week, the Nifty Bank has been nose ahead of the Nifty. This week itself, for instance, Nifty Bank is up 2.5%, the Nifty is up 1.3%. For the month of May, so far, Bank Nifty has risen 1%, Nifty has risen 0.1%. If indeed the markets have bottomed out and banks are a safe bet, then which banks? I'm joined by Rikin Shah, Senior Vice President, IIFL Capital. Rikin, good morning. Thank you very much indeed for joining me. First, a question actually for your head of research, but you would be privy to it. If one assumes that the market is turning, after all, you know, for the we have seen it go past the 23,000 mark and now cross 24,000. The war appears to be in its last legs. If we are on an uptick, where does banking figure for y'all in terms of sectors? Is it one of your top buy sectors?
Yes, Lata. So the financials is one of the preferred sectors for IFL as a house. And that has been the case for the last few months as well. Within that, of course, we have some bottom-up picks within the financials, but we clearly think that financial vis-a-vis other sectors offers a unique combination of inflection in earnings earnings growth for especially the large private banks, which is at par or better than broader market, and where valuations are at a significant discount. So on account of these three reasons, it is one of the most preferred sectors for us as a IFL house.
Okay, I'll come to the within the banking sector in just a minute. Can you tell us what is this difference? I mean, what is Nifty trading at? What is Nifty Bank trading at in terms of standard deviation from normal? And likewise, earnings. What's the non-financial earnings forecast? What is the financials earning forecast?
So if we look at and I'm just going to give a slight backdrop as well. In the last few years, the bank's earnings were steadily decelerating. Now looking ahead for the next 2 years, the large private banks are expected to deliver about 15% earnings CAGR. Of course, the PSU banks will be lower. And the Nifty, as we stand today, we are forecasting it to be delivering low double-digit earnings CAGR. So earnings growth for the large private banks at par or better than the broader market. And when it comes to the valuations, Nifty is trading at about 18 times forward PE, which is about slightly above the average. On the other hand, if I look at the banking sector as a whole, they are trading at 10 times PE, which is one standard deviation below. And even within that, if I bifurcate between the private banks and the PSUs, private banks are trading at about 12.5 times 1 year forward PE. So similar or better earnings growth and cheaper valuations, which is where the backdrop for banking looks a lot more favorable, especially in the context of impending rate hikes as well.
That is a cast iron case you're making for financials. Thank you for that. Now let me come within the banking sector, and that's where I'm raising some issues with what you have argued. You have argued that the 5-year outperformance of PSU banks versus private banks comes to an end, and now you're seeing public sector banks at a compounded annual growth of 6% versus 14% for private banks. Now, what makes you so sure? 5 years is a very decent record of outperformance. And mind you, most of the analysts in those 5 years did not tell us that PSU, the good run of PSUs will run for so long. You know, people thought it'll be okay, 1 or 2 years. What makes you think that it will not surprise yet again?
Fair question, Lata. So, we need to just dissect this higher earnings growth and hence outperformance of PSU banks vis-a-vis private banks for the last 5 years. So if I look at the core PPOP growth for PSU banks in the last 5 years, barring 1 year, they were always trailing private banks. In all the last 5 years, the core PPOP growth of PSU banks was lower than private banks. But what was helping this PSU banks was a very significant acceleration in the non-core income. So just to put these things in perspective, the non-core income basically constitutes two parts. One is the treasury gains and second is the recoveries from written off pool. Now, both these items put together, they constitute 30% of PSU banks PBT. And if I have to contrast it versus the private banks, it is only 9% of private banks PBT. Now, the reason why we say that going ahead for the next 2 years, the PSU banks' earnings will now trail private banks is essentially premised on these three simple points. First, core PPOP growth was already weak for PSU banks relative to private banks. That doesn't meaningfully change. Number two, the loan growth market share that the PSU banks were gaining in the last 2 years for the first time in many, many decades. Now we are saying that they will grow in line with the system. And the simple reason behind that is they have been drawing down on their excess liquidity rather very rapidly. So in fact, in our conversations, when I flagged that the SLR holdings of PSU banks as a percentage of their liabilities is now even lower than private banks, many people find it very surprising because they have been selling down this excess liquidity and deploying it into loan growth. And that is how they have been able to deliver those loan growth despite very weak deposit growth. FY27, my simple call is that the market share loss of private banks now stops. I'm not calling for private banks to gain any market share. And that's also an extension of reason that RBI is no longer constrained or looking at CD ratio, but is more focused on liquidity. The third and the most important point, which makes us feel confident that PSU banks' earnings will trail, is this non-core income. And even within that, I'm focused only on the treasury gains. So 15% of PSU banks' PBT, even in the last 3 years, was coming only from this treasury gains. The way the bond yields have moved in the last few months, it is amply clear to all of us that this treasury gains are now going to evaporate. and the sensitivity of this to the PSU banks' earnings is significantly higher. So a function of slower core PPOP, end of loan market share gain, and the dissipation of the treasury gains is why we think PSU banks' earnings growth will finally trail private banks. We are still not saying that PSU banks' recoveries will come to an end. They can continue for maybe another year or two. It's anybody's guess, but it's not going to accelerate. That's also clear. And within this construct, when factoring in all of these things, it tells us that PSU banks' earnings growth is likely to be 6% CAGR, whereas the large private banks are expected to deliver 15% earnings CAGR in the next 2 years. And the valuation-wise as well, the private banks have seen significant derating, and now they are trading at around 12.5 times forward PE. And that's
I take the point about valuation completely about private sector banks, but it is just that I'm not able to accept the 6% when State Bank just the other day is posting something like, 12% and 15% in terms of loan growth. I agree their margins were under pressure. But the 6% came as a bit of a shock to me.
What was the PAT growth, Lata, right?
PAT growth was bad. Yeah, PAT growth was...
in the end, all we care about is the EPS growth, right?
I agree. No, I agree. But what may constitute the turnaround for the private sector banks? See, there are significant headwinds for the economy itself. Growth is not going to be as good as we thought earlier in the year. And more importantly, it doesn't look like NIMs are going to be that good. Yes, there is a talk that there could be a rate hike, and we may get one later in the year, going by the way crude prices are. So that will be a relief, but that will be a relief for everyone. Do you actually expect higher NIMs this year, FY27, for your three private sector favorites?
So Lata, coming to the NIMs, in our numbers, we have not built any incremental rate action, be it a rate hike or rate cut. Having said that, if I look at the OIS rate, it is already pricing in about more than 100 basis points of potential rate hikes in next 12 months. But let's keep that aside for a moment. And if we just frankly look at what could be the NIM trajectory in absence of any rate action, rather than painting everything with the same brush, we have developed a very interesting framework which tells us bank-wise what is going to be the residual cost of deposit trajectory for each banks. And within that, for banks like Kotak and Bank of Baroda, the cost of deposit should start rising. ICICI is largely done. And on the other hand, some other private banks can see some further improvement, but that's not meaningful on cost of deposit side. The simple point here on a FY27 to FY26 basis, my margin forecasts are broadly flattish for the sector, but there is a clear divergence within the individual banks. We think that the likes of Kotak, Bank of Baroda will see margin compression, meaningful margin compression. The other three private banks which we prefer will be flattish. And some mid-sized banks who have got some recent capital infusion will see some margin expansion. But the discussion becomes a lot more interesting if we were to think about what happens when the rate hikes come through. Clearly, the private banks will be a bigger beneficiary rather than PSU banks because 50 to 60% of private banks' loan book is linked to repo. On the other hand, this number is about 35 to 40% for PSU banks. And as a result, when the rate hikes start to come through, private banks' margins will see a bigger leg up vis-a-vis the PSU banks. And that's an upside.
Yeah, go ahead. Sorry.
Yeah, and that's an upside optionality on our numbers, both for private and PSUs.
Okay. No, point taken. If the margins are going to be flat, the loan growth is the only reason, then we should expect private sector banks to get a leg up. And I think HDFC's traditional problems are also over, having to match their HDFC book with an additional number of deposits. That problem is over. Now they should deliver at least industry-leading or even better than industry loan growth. Point taken. Actually out of time, but a more detailed discussion as we get closer to the next results season. Let's see what the Reserve Bank delivers on June 5th. The consensus now is no... it's not even a consensus. The majority says no to rate hike, but it is not a consensus. Even now, there is a minority expecting a rate hike. So things can get interesting for the banking sector. Thank you very much, Nikin, for whetting our appetite. We have to wrap up on Bazaar out of time. Chartbusters off the break.